That being said, hit the like button, subscribe button, all that YouTube algorithm stuff, so you get videos I put them out, so you know I'm thinking, so I'm analyzing that data. Listen, I made a video a few weeks ago where I said that I believe that Credit Suisse is holding AMC shorts, but I didn't believe that they actually were shorting AMC. I said that they inherited these shorts because of the Archegos fiasco. And because they were the last creditor holding the bag, they ended up with all these AMC shorts on their books. And the thing is, Credit Suisse had no intention of directly shorting AMC. So they found themselves in the middle of this shorting war. And here's the thing. Citadel directly shorted AMC. Virtue directly shorted AMC. BlackRock directly shorting AMC. And here's what I believe is happening. And I hinted on it earlier, but I wasn't very direct. I believe that Credit Suisse wants to get out of their short position, but the other bad actors, the other hedges that have been, illegally manipulating AMC stock, create those billions of counterfeit shares, I believe they are putting pressure on Credit Suisse not to close their shorts, because they know that once Credit Suisse starts closing those shorts, AMC, GME is going to go to the moon. So I believe, and this is just my opinion, I'm going to tell you to buy, hold, or sell. I believe that they might be actually compensating Credit Suisse not to close their shorts. They're probably paying Credit Suisse's cost to borrow fees. They're probably paying Credit Suisse whatever they need in order for Credit Suisse not to close their positions. But here's the thing. These bad actors, these hedges, these market makers, their liquidity is drying up too. So they are not going to be able to continue paying Credit Suisse to not close their position. Credit Suisse wants out of the play. Credit Suisse is losing money every other place. I mean, Credit Suisse is done as far as I'm concerned, but they don't want to go down with the ship, especially with a position that they didn't voluntarily get into. Okay? They did not and this is just my opinion. I do not believe Credit Suisse voluntarily got into shorting AMC. I believe they inherited from the Archegos fiasco, and I believe that the other bad actors are actually paying Credit Suisse or supporting Credit Suisse, putting pressure on Credit Suisse not to close their AMC short position. Anyway, hit the like button, subscribe on our YouTube algorithm. Tell me what you think.
Oh, dear Lord.
About these other bad actors putting
I have absolutely no idea.
So they won't close their AMC short positions. Anyway,
proof that
God bless, and I appreciate y'all.
Wearing a goddamn suit and tie does not make you any more intelligent than wearing a t-shirt and shorts. Oh my God. Credit Suisse is shorting AMC. They didn't want to be, but they inherited it from Archegos. Okay. Is that how it works? You can inherit short positions? I mean, goddamn. What a terrible inheritance. Here's the Common Sense Investor, CSI, with, well, the first of several illuminating pieces that we'll look at.
What's up, everybody? It's the Common Sense Investor coming at you with another video. In this video, I want to call foul, rat, something's not right. Citadel Securities and Virtue and Susquehanna are all being sued. All right, the articles from Financial Times right here. Cancer drug company accuses U.S. market makers of stock spoofing. Northwest Biotherapeutics claims Citadel Securities, Virtue, and others drove down its share price. All right, a cancer-focused biotechnology company has sued 8 of the U.S.'s largest market-making traders, including Citadel Securities, Susquehanna, and Virtue, alleging that they deliberately drove down its price by placing sell orders they had no intention of executing. That's called spoofing. The complaint filed by Northwest Biotherapeutics in a federal court in New York on Thursday claimed that the traders deliberately engaged in repeated spoofing that interfered with the natural forces of supply and demand by placing tens of millions of fake orders between December 2017, and August of this year. Now, that's some awesome news. But then again, I smell a rat. I first got the email about this article. Then I hopped on a phone conversation with somebody and we talked for an hour about this stock. And then when I get over to the Discord, they're talking about it. But like I'm telling them on the phone, something's not sitting right with me on this chart. For example, from 2017, right here, from where they're claiming in the lawsuit they were manipulated. All right? This is the time frame that they're discussing right here. December 2017 to August. Let's back this up to August. So up in here, all this time they've been manipulated. But you would argue, look at this run up. This son of a bitch ran up. $1,500%. And now it's falling back down. So if you were going to cry market manipulation, wouldn't you cry it from this point here? Would be the easiest. Why pick this point here? All right? And I'm going to show you the next thing that gets me. Is you're going to file a lawsuit saying that Citadel, Virtue, and Susquehanna has messed over your stock between 2017 and August of this year. But what
It's an
about
OTC
all
stock.
of this? Look at this push down, people. That's at 85
Look at all
cents
these
right now.
terrible earnings reports
What
here.
about right here?
Red earnings.
How come this time frame isn't in the lawsuit? You see? Because it's obviously being shorted here. And
Obviously, no.
From 1250 to 85.
It could be because they had
so why
shitty
stop
earnings.
right there? And then you just go on. Look at this.
Lynn,
Manipulated.
how dare
from
you let your phone run out?
163 down to 14. Down to 85 cents. Why isn't all this included in the lawsuit? Huh? Or what about from its IPO date of December of 01, when it was trading at $1,430 a share, and it got pushed down all the way to 85 cents? How come none of this is included in the lawsuit? I'm going to tell you why, people, because just like I shared with them on the phone call and in the Discord, this kind of stock is what I call their playground. And immediately after I looked at this stock, I thought of Rivian and how that is a stock that they used as their playground. And when Northwest Bio first came on my radar a couple months back, it was the same conclusion I came to when I looked at the chart. This is their playground. And now all of a sudden, they're going to be suing Citadel, Susquehanna, and Virtue? I don't think so, people. It's meant to be a distraction.
Okay, so here's a Wall Street Journal article. Oops. Supposedly somewhere. Yeah, here it is. From Thursday. Biotech company says Citadel Securities, other big traders manipulated its stock price. In a new lawsuit, Northwest Biotherapeutics accuses market makers of illicit spoofing orders. Everything that he said. But here's a response from Citadel. Quote, this frivolous lawsuit appears to be nothing more than an attempt by Northwest Biotherapeutics to divert attention away from its long history of governance and management failures, SEC charges for financial reporting lapses, and lawsuits from its own shareholders, Citadel Securities spokesman said. We intend to pursue any and all legal action against Northwest Biotherapeutics for making these false and baseless allegations, which only undermine the integrity of our capital markets. Northwest shares trade at about 83 cents. In 2019, the company settled allegations by the U.S. SEC that it had failed to maintain internal control over its financial reporting. Spoofing, which was outlawed in 2010, has been at the center of a years long campaign by U.S. authorities to root out market manipulation. In August, a federal jury in Chicago convicted two former J.P. Morgan Chase and Company traders who had been charged with spoofing in the gold market. In the modern stock market, high-speed trading firms such as Citadel Securities and Susquehanna provide stock quotes throughout the day, executing orders from other investors while collecting a thin spread between the buying and selling price of the shares. It is unclear from the data cited in the suit whether the alleged spoofing orders were placed on behalf of other investors or by the firms themselves. But Northwest argued that these market makers knew it was unlawful to execute the alleged trading tactics and should have had procedures in place to detect and prevent them. The market makers, Northwest wrote, quote, deliberately engaged in repeated spoofing that interfered with the natural forces of supply and demand and drove the company's share price downward over the course of the relevant period. Let's see. One of the telltale signs of a manipulative spoofer is a rapid reversal of trading direction. A lot of sell orders followed by a lot of buy orders, followed by the cancellation of the sell orders, which suggests the original sell orders were not intended to be executed, but were merely a ploy to drive the price down to buy low, Northwest said in its complaint. The company said it found thousands of spoofing episodes involving tens of millions of, quote, baiting orders over a 5-year span and was able to identify the market participants using trading data. How in the world did they do that? Identified the market participants using trading data. Hmm. But they also don't know. They also said that they don't know. Where was it? It is unclear from the data cited in the suit whether the alleged spoofing orders were placed on behalf of other investors or by the firms themselves, but they're able to identify the market participants. Interesting. Okay. So let's go back here.
Now, I've looked at the company. I know what it does. It's trying to find a cure for cancer, and I'm down with that. So some people are considering
Well,
getting
I'm
into
down
this
with that too,
play
but
because of the
not to the tune of
moral
fraud.
standards of it that is working towards healing cancer. So I'm cool with that. Just know that what you're getting into is possibly one of their playground stocks, and you could benefit from it when it does its dips
There,
and its dips.
there,
But be careful. This is their playground. And if they're bringing attention to this stock right now with a
they.
lawsuit, I just can't get over. Why didn't you start the lawsuit from the day of your IPO when you were trading at 1400 and then got pushed down to 85? So I don't believe it, people. I believe this is a distraction.
Well,
I
just
believe
because somebody doesn't do something at one point and then they do it at later at a different point doesn't mean that it's not true. I mean, there's a lot of context here that's being missed, being ignored, uh, that he doesn't know, that I don't know. So, I mean, that's not a valid reason. But did it IPO on OTC or was it on the NASDAQ market or the NYSE market? I mean, we don't know that. Uh, and also what about the allegations of late filing and fraudulent practices by the company itself? You know, yeah, a distraction from what? AMC? Of course. Yeah, because they need people to, like they all say, they need people to diversify their short squeeze plays. They need them to go from play to play so that they can lose interest in AMC, sell their AMC shares, so that the shorts can buy them, shorts cover, and no squeeze. That's my guess. I don't know.
that you would, their intention is possibly to help push some people over here to this stock and away from your main plays, which is AMC, Ape,
Boom.
Hycroft, GTI, or whatever the case may be.
Wyckoff Mining,
All I
right?
can tell you is, in network marketing, we had a saying:
Wait, this
Scan
guy's
the
in network
ivory
marketing
syndrome.
too? What? No wonder there's so many similarities between him and Mohammed. Wow. Okay, that explains a lot.
And I come over here to the stock market, I see a lot of people have the same thing. Shiny stock syndrome. This stock is shining right now, and it's really got our attention because they're suing our devil. But I don't think I'm gonna fall for
Our
it. Now,
devil.
will I be right? I don't know.
Isn't there only one? How
This
can it be
lawsuit could be
our
real,
devil?
and this stock could go up 10,000%. I don't know. I just know that I feel it's trying to get me to take my eyes off the ball, which is AMC Ape Highcroft.
Well, it's not trying to do that. I mean, it's just a lawsuit. It's not trying to do anything relative to you. It's trying to, you know, make a lawsuit, get a settlement, but that doesn't have to do with you. What does that have to do with what? No, I mean that's all up to you. It's your responsibility. Don't be distracted by bullshit. That's all. That's all.
With that, I'll let you go. Love y'all. Be blessed. Hope this helped y'all. Don't fall for anything you read.
Don't fall for everything you read. Okay. Um, so I was looking at the commitment of traders report. Um, and this comes out on Fridays and it reflects the previous Tuesday. Okay, so this is for the Chicago Mercantile Exchange futures positions as of 11/29. And this is, we're looking at E-mini S&P 500 here on the CME. Um, and we're looking at, it's interesting here. So dealer intermediary is more net short than long. However, by a little bit. However, asset manager institutional is by far net long as opposed to net short. But leveraged funds, which is your hedge funds, is net short by a pretty large margin. So viewed in in sort of this bar charts here, dealer being short more than long is interesting compared to the leveraged funds being way net short. So, and we can see how this has changed. Let me see here. We're looking at, yeah, we're looking at 2022 here. So leveraged money is in green. It's the green line here. And the zero line here is net neutral. So we can see that the asset manager institutional category in basically starting at the end of September has shifted net long. While the leverage money is sort of hanging out in a net short area. So I just thought this was interesting. I've been taking a look at this more often here. And admittedly, I don't know too much. I can't read too much into it at this point, but yeah, just thought that was interesting. Okay, so as we prepare for the futures opening at 6 here, let's see. I'm going to skip to something different here. So This is Tendy time. Tendy time. Lou versus Wall Street. Bad DD. How a pump works.
What's up, people? Hope y'all having a great weekend. Hope y'all been knocking them good deeds out. This video, I'm trying to show
Model
the
3
extreme
dude.
dangers of following and listening to pumpers that have no fucking idea what they're talking about. They're only doing it for ad revenue, making these crazy high numbers. And like John Wick said, John Wick had a very good video. These people are planting seeds, and we'll get into that. But all right, let's talk about this. I seen a video yesterday, and it's what prompted it all. GTI, now they're in a gold mine, or they're in the gold business all of a sudden, because he didn't find this out. Someone sent it to him, remember? And I don't know what the fuck he does. He says he doesn't watch the chart. He's not like us. But he doesn't find any info. Everyone sent him, like, GTI is Ham's fault. COSM, when it goes down, I guess it's going to be Bill's fault. But anyways, let's get back into this video. All right. So when I heard him say about the gold mine being some brand new thing, I was like, I think I remember when I was looking on their site, I remember seeing gold bars. So I went to their site, what I hope anyone of you in GTI has already done. And sure enough, you see this. Gold Transactions International Inc. So what do you think? They just, I mean, it just blows my freaking mind. Well, then I started doing a little bit of research, and I'm not a tech guy. So if I can find something, a tech guy should have been and found it, and damn near found the exact person that wrote it, the computer it came from, this, that, all of it. But anyways, I found out, I posted in my community section yesterday that they was talking about it back at the beginning of this year. Well, I got a guy, like this guy has a guy. He sent me a article even older. This is back from November 10th of 2021. Check it out. So really, what kind of DD do you do? Because this is old fucking news. In the beginning, you find a momentum play. It's not hard to find momentum plays. But when you have a large fall and then you start saying these crazy numbers when, let's say like it's at 60 cents. You start saying these crazy numbers, and like you're already saying, I'm getting info from Ham and Bill and the fucking, what was it, the washing machine guy at the fucking place, wherever the fuck it is. Anyways,
Maytag,
all
man.
this information from other people. So shit hits the fan, it's other people's fault, like we're seeing with Ham. And then with COSM, he's saying
Ham. He's saying ham short killer. That's that. I just figured that out.
Like 3, 7, 10, whatever. It depends. If you hold, then you're talking 30. He's saying it could go all the way up to $120, which, mark my words, it ain't going to $120. But still, these newbies, even not newbies, when they see the video and they see COSM has a run and it, I don't know, maybe gets to like $2 or $3, then they're thinking, hey, he said it, this is possible. So maybe they all double down and maybe it gets up to $8 or something. Highly unlikely in my opinion, but anything's possible in this market. So let's say it gets to $8 or $9. Well, everything's clicking in their head. All of a sudden, bam, the shit starts going off, which these are the seeds that John Wick Sniping has talked about. But the seeds are planted, so when it gets to $8 or $9, it's bam, bam, bam. Everything's going off. Same exact thing that happened with AMC. Because he even says that it can get to that depending on how retail holds. Meaning, it can get to these numbers, but you just got to hold. And it was at 50 cents. Now it's at $9, so he has to be right. And it starts tanking. And next thing you know, it's Bill's fault. Bill sent me with some bad info. Dude, I don't know who the fuck this Bill guy is. I haven't seen this Ham guy's video, but are these people claiming they are Wall Street guys, or they used to be Wall Street guys? They used to be,
yeah, right.
or they are,
yeah,
tech guys.
right.
That they created the first blockchain. I think was your word.
What a bunch of
You
nonsense.
said you created the first blockchain. With that being said, y'all, please be careful. COSM still does have a good chance to make a good bit of money for people this week, but please be careful. Don't set your price targets off of anything anyone on YouTube says. Not me, not anyone. And please,
Yeah, really.
fact check and double check whatever you hear. Like all these things that I just showed, go check them out. Make sure they're not some Photoshop bullshit from Reddit. And with that, y'all have a good weekend. Enjoy your day. Go do a good deed. Appreciate y'all.
Okay. Here's some GTII stuff here. Look at this balance sheet. This is a 10Q. September 30th, 2022. Cash and cash equivalents, 280,000. No accounts receivable, no inventory. About a third of the assets that they had 1 year ago. Well, they got a license and some fine art. Accounts payable, about $1 million. Notes payable in default, 800,000. Total current liabilities, 3.7 million. Plus payable notes, total liabilities, 8.5 million. They currently have, what was it? 280,000 in cash. So, yeah. No income tax, of course, because there's no income. Anyway, what a shit show. What a shit show. Futures are open. Gapping up. But the 10-year note gapped down. So we got NASDAQ, S&P futures, Dow futures, oil, natural gas, gasoline, RBOB, VIX futures, 10-year notes, and the dollar. The good old dollar. So we'll keep our eyes on that. Now, something completely different and ridiculous. AMC short squeeze paid for by USA cash to Ukraine. I've been waiting to watch this one. AMC short squeeze paid for by USA cash to Ukraine. Okay.
Hi friends, welcome to Stocks and Crypto Plays. I have some breaking news I'm going to share with you that I've uncovered through my research. But first, I want you to hit like, subscribe, add notifications at the end, share the video with a friend, and please be sure to comment some bullish news below. I appreciate you all. And today,
bullish comments only.
AMC stock, and I've got some very vital, important news for you that I've uncovered from my research. So first, I'd like to say that today is December 3rd. So we are about 12 days away from the T plus 90. So from the special dividend on August 22nd, we are about 90 business days, trading days actually, from
trading days, business days, calendar days.
So December 15th from today is about 12 days away. So keep that in mind.
This is the third date, I think.
But that's only one small
offered.
point. That's not why I'm doing the video. The video tonight is because I've uncovered something. I've been trying to put it together. So basically we saw $90 billion just about a week ago be announced was removed from Credit Suisse, $90 billion, okay? And they called them outflows. We all know that $90 billion was to prepay for the AMC short squeeze, and you can check that out in my previous videos. But it goes much deeper than that, okay? So listen closely. It's very important. The AMC squeeze, the AMC MOAS has to be paid for before the New York Stock Exchange will let it run. As you know, they do halts, they control the markets, the market makers control everything, and they are not going to let AMC run to the moon unless everything has been prepaid and all the exchanges have the cash on hand. So keep that in mind. And that's been in the process since when? Since August 22nd. That's when Aron did this genius move to deliver the ape shares.
Oh my God.
So that they would have, the hedge funds would have 90 days to cover their shorts. And they would not be able to just cover with their synthetic shares. They have to buy the real shares. So when he did that brilliant move, the hedge funds and
that's a direct quote.
Players involved with them knew they were going to have to pay for the short squeeze. So how are they going to do it? Where do they get the money? Well, you just saw $90 billion get sent out from Credit Suisse.
Oh my God.
Not too long ago, about a week ago, they paid the Fed to pay for the AMC short squeeze. But that's not enough money. They needed more money. So if you take a look at
absolutely
it, the dividend
pathetic,
from AMC stock was paid on August 22nd.
You uncovered it with your research. Where's the research? Nothing in the description. No links. No research.
2022. Okay, pay close attention. August 22nd, 2022, the dividend was paid, the ape dividend was paid by AMC, right? The clock began to tick. These hedge
funds, I mean, I guess you could look at it that way, or you could say that the ape dividend was paid out of the shareholders' equity. In other words, they took the existing stock, and chopped a bit off of it and distributed that and said, here you go. Well, here's your dividend. So not really. Wasn't really paid by AMC. It was paid by the AMC shareholders.
Have to pay for the short. That's when the clock started ticking, okay? Interesting. U.S. announces $2.98 billion in aid to the Ukraine. When? August 24th, 2022. Just 2 days after the AMC ape dividend. Just 2 days after. That means on the very first day, on August 22nd, or probably before, they were already scrambling, figuring out behind the scenes how to pay for this short squeeze, how to buy back the real shares. The wheels were already in motion.
I mean, this is nonsensical. It makes no sense.
I hope you hit like already by now. I hope you.
Oh yeah, of course, everybody has. Look, everybody did. 688 to 1. Dude, like, how can they say that they can't pay for the short? Makes no sense. Makes absolutely no sense.
Hit subscribe.
Manny,
I put this work together free for you guys.
I don't know what's going on with my connection tonight.
To enjoy, because I want to help people to become financially free, because that's my goal.
Dropping frames
Freedom
left and right
is my goal, friends. So we saw that money, right, go out. But did it go to the Ukraine? We all know it didn't.
We all know that?
We all know.
Oh, okay.
it didn't. So that's 2.98 billion. And I did some more research, and it's really hard to find how much money was actually sent.
Okay, we may be back. We may be back. Sorry about that.
That's all I wanted to share with you today. It took a lot of research on my part to put this all together over a course of a certain
show your
period of
work.
time.
Show your
and
research.
I kept putting pieces together, and here it is for you. So hit like, hit subscribe, add notifications, and text the video to a friend. Share the video.
God, okay. I have always told myself that this government needs this to squeeze. They need the influx of tax dollars to come in. And for people who don't pay it, those new IRS agents will absolutely go to your door and take you to jail if you don't pay. Thanks God we finally got someone on the high end here with some class. What? They have to buy back the real shares. Oh, God. Oh, my God. This has been a truly psychological battle. Great DD, this is mind-blowing. Look, all these people are just totally believing this shit. And he provided 0 facts. I'll have to ask Trey about this. Oh, okay. After listening to you, I don't need to listen to anyone else. Oh my God. This is extreme ostrich effect here. Holy shit. This cat needs new meds. Just making shit up at this point. I like your videos, but this is a conspiracy theory. And he replies, it's detective work. If you lose enough of other folks' money, they definitely will not arrest you. Just ask SBF. These people crave to be a part of something so bad. Yep. Every day is a psychological battle. If they haven't figured that out, well, doomed. Probably. So you are saying that Ukraine is being funded by AMC investors? Have another joint, bro. Do your own DD. Bro, what are you talking about? Reported for false information. I support that. It makes sense. What evidence do you have to prove this? Talk is cheap. No one has evidence. No one has evidence. You just have to open your eyes. That's all. Good God. That's a stretch of imagination. Biggest BS I've ever heard from an AMC YouTuber. Lies. Opium trash. Oh my God. Wow. Antoinette, what did you miss? Well, the AMC short squeeze was paid for by USA cash to Ukraine. You missed that. You missed well, not too much, but let's check out the futures. Back over here. So the volatility is continuing to march a little bit higher as the stock indexes march a little bit lower, as well as the 10-year note. Over here, dollars popping up. And yeah, not too dramatic yet. Let's go all the way. Chad Hardy says this is something new. Yeah, I haven't heard it. I haven't heard this yet. Not surprising that they would take it there. Let's just go all the way and say AMC was Biden's largest donation. Did AMC squeeze today? It has billions of synthetics. I heard that it squeezed on the blockchain today, but I haven't been able to confirm that. Hunter Biden has AMC synthetic shares on his laptop. AMC is a cover for Bill Gates controlling the world. We got to work Elon Musk into that somehow too, in order for that to be legitimate. So, wow, what a bunch of nonsense. Okay. So here's somebody named J Trader. J Trader. AMC community is full of trash, or is trash full of idiots.
Yeah. What's going on, guys? Yep. I just been sitting back watching the whole community collapse. Me and Fat Man here. Ain't that right, Fatty?
Fat Man. Fat Man.
Let's not put any buying pressure on top of them shorting the stock. We don't need buying pressure at all, guys. Y'all some fucking fools, man. Oh my God. Say hey, Fat Man. You gonna tell him hey? This is what I've been busy with. Trying to be a dad. Oh man, he got his feet in my face. Look at him. I don't have time for this childish back and forth bull. You know, one of these days, somebody's gonna wake up. And that's the only reason I came to YouTube, was to tell you to question these people.
My man.
You see in my previous videos, I called out everybody. I was the first one to do that. Nobody said anything. Everybody was blindly following these people. And by you guys trying
Look at
to
this
cancel me.
from last November.
Hey, man. Oh, man. Oh, you got me. By you guys trying to cancel me, you ended up allowing them to go forward with their plans. It was so easy to infiltrate our movement because everybody is stupid. We are so stupid. Oh, there it goes again. This is ridiculous, y'all. Y'all sit there and listen to this criminal. And it's scary that he would even have a platform. Knowing his background. Why are we that dumb? We as a whole should be smart enough to know a con man when we see it. Oh man, what'd you think about it, Fat Man? What'd you think? It's ridiculous. Oh man. You blocking me, man. You want people just to talk just like your brother. It's sad though. You know, I look at how I was treated by the whole community when I was telling you, hey, watch out for this person, watch out for that person. These people.
Anything's going on here.
This is what happens when you work to change things. And first they think you're crazy, then they fight you, and then all of a sudden you change the world.
They don't have any intentions on
Just had to throw that in there.
Trying to use the movement for self-gain. But nope. Nobody wanted to listen. Nope, you got me. Good job.
I don't know who he's talking about, to be honest.
You know, let's not put buying pressure while they're trying to short AMC and GameStop down, because they're just gonna route it to the dark pool. Let's not buy any shares. Let's just hold our shares. It sounds to me like somebody bought some puts or somebody got some type of backing. Hey man, you gotta talk while I'm talking. It's ridiculous. This man walks around talking to a damn duck. His duck is his financial advisor, and he's just relaying the message from that fucking duck, man. Fucking Canadian goose. It's not even a duck. Oh my god. You ain't even got that right. It's a Canadian goose. It's not even a duck. It's on the second order books. They got the price on the second order books.
Yep, that's Lou.
You hear that, fatty? You hear that, fat man? Man. But hey, what can I say? You know, I noticed that the movement shifted to Twitter. And you guys don't remember how we had Reddit, then we went from Reddit to, you know, then we had YouTube, of course, stock twits, and other forums, and all of a sudden everything shifted to Twitter. Why did everything shift to Twitter? Are we not questioning that? Because when everything shifted to Twitter, he reactivated his Twitter account. And now he's on Twitter. Twitter's full of bots. Go read the comments on his videos.
Elon Musk said so. Yeah. Let's see. Phil for real. Talk that talk, brother. Spreading nothing but truth. Cute kid. Who's the father? Okay. But let's go to the real big man.
What's up, YouTube? What's up? What's up? I'm back. Big man speak. Let me say one thing. This not finance advice. This for entertainment purpose only. Let me tell y'all one thing. Last week I was in a damn play. My order was pending. I did all the homework. The motherfucker did go through. I was doing option, a put contract on Snap. They all running game out here, even with the order. If they think the order gonna fill, they think if you gonna make some money, they ain't gonna fill the motherfucker up. It's all a hustle. It's all a hustle. It's all a game. I had this play down pat. I had the right play, the right strike price. And you know, that shit got below the price. I would have made a lot of money. I had 300 contract a Snap put. It's all game. Just like that AMC bullshit. Like my man say, what he say?
The short cover? What you talking about then? It's a true statement in a way, and somewhat the way, but they all covering shares. It's just like, I'm gonna use an example. If you don't understand, just say you got a motherfucking credit card and you pay the least of the balance. This shit don't go for years and years. But they don't give a fuck because they got billions and billions of dollars. That's why this play not gonna go no fucking where. But Big Man Speak told y'all last year, I was saying the same old shit. They were saying, fat man, you don't know what you talking about. Look at the play now. The play is like $7 or, no, it might not be 7, I don't know. But this motherfucker play not going nowhere. And then, you don't hear the YouTubers talk about it so much now. Because they made all the money off y'all with the AMC bullshit. You know, I don't sell cups, I don't sell t-shirts, I don't do none of that shit. I tell the people the raw deal. You know what I'm saying? I tell the people the deal. And then they would talk about a protest. A4 would talk about a protest. You know? He going down there and looking like an asshole. Looking like a clown. You know? You don't handle business like that.
Jesus Christ.
You do things you do things in DC and he going down acting crazy and say, "Wow!" from the place. You don't do a protest like that. You know? They already think we dumb and they call us dumb money. Then he going to the protest acting like an asshole. Like he don't got no damn sense.
Yep.
But y'all need to do something though. Y'all need to do something because this play not going nowhere. A lot of people got this play a long time ago. This shit is dead now. Ain't nothing to bring this play back to life. Ain't nothing to bring this play back to life. AMC is dead and not coming back. Yeah. The short cover? What you talking about then? You got the good idea, but the short is being covered. Slowly, just like that Zach I told you about that credit card. You got to find good plays. You got to find good plays to this shit. Wall Street is like gangsters. They don't give a fuck. Yeah, I had a good play. And my motherfucking order didn't get filled. And I will buy ass that price, the asking price. Yep. They control this shit. Don't let this shit fool you. They control this market. You know? I pick a different play and it'll do shit. Next time the shit pin, if it pinning, I'm gonna let this shit do what it's gonna do and just say fuck it, it don't go through and try another time. I would have some sure enough money if that play, it did pin for me. 30, 45 minutes the motherfucker to do shit. And went to the price. And went to the motherfucker price. Big Man Speed got mad crazy plays. And down market.
Mad crazy play.
I got mad plays. You can't be afraid to take plays though. Afraid man can't make no money. Yep. Big Man Speak. Tell it like it is. Tell it. Big Man Speak. They running game out here. They running game. You know, people like Lou. I don't think he never been in the motherfucking AMC. Yeah.
I don't know. That's truly
I
criminal.
think he sold all his
right
damn
there
shares.
that he doesn't have more supporters, followers, subscribers. So you know, we're subscribed, but here's a link to the video if anybody wants to go subscribe to him.
He just took that damn loss and say fuck it. But if you like my channel, subscribe to the channel. You know, give me a thumb up. I'm trying to get 1,000 subscribers. And if you like me, buy me a big ass cheeseburger. You know, cash at me. Big man speak. Buy me a cheeseburger and I will eat it on YouTube. Buy me a big one. My cash app gonna be down in the description. Cash at me. I tear that cheeseburger up. Yup. Big man speak. Tell it like it is. I was catching hell last year. They would say, fat man, you don't know what you talking about. AMC,
Fat man.
$500,000. AMC to the moon. AMC going to $1 million. AMC going to $50 million. People like A-Far was saying that shit. And look at that shit now. It's not going no fucking where. It's down to the damn ground. It's burning. Look at that shit now. It's not going nowhere. You been lied to. You got people doing protests look like a clown. You don't do no protests like that. You don't go downtown and look like a damn jackass. You don't do that. You make other people look bad.
Yep. It's
You
embarrassing.
need to stop your shit. But it is what it is. Y'all have a good night. I'm going to leave my Cash App down. If you like me, buy me a big cheeseburger. I want a big cheeseburger. I want fries. I want soda. Subscribe to the channel. Y'all have a good night. And have the short cover. This is my saying now. I'm going to say this. What the fuck you talking about? They did cover and they're not going to cover. Y'all stay safe out there. Peace.
All right, peace. So, we'll come back to that guy. Come back to that. We'll come back to that character. K. Oop, well, K. RKKKKKK. All right, we'll have more comments on that in a minute. Yeah, you know, Manny, we watched that. We actually watched that Tendy Time video already. Most of it, not all of it. Here somewhere. One of these that I closed. No. Yeah, here it
Have a
is.
great weekend. Hope y'all been knocking them good deals.
So, but we skipped. I cut it out. I I think part of the way. No, maybe we did. Maybe we did watch the whole thing. I forget.
And maybe it gets up to.
Okay, we'll come back to it. But
what's going on, guys? Gabe here.
Now, in all, disclosure here, this is from April 25th, 2021. Okay, so we're doing a little historical review because it's fun.
With the View Dork. Now, my last video received a lot of love. Do I have the conviction that AMC could reach up to 100,000 a share? Absolutely. Did I say that bare minimum 100,000? No. Now, when we look at this here, and you guys can see my little drawing here, we have the hold period as the stock makes its way to a peak, and then the general consensus is that everybody sells on the downtrend. In a perfect vacuum, this works, assuming that stocks only go up and then they go down. But now lurks
got
the question. Well, actually, two
short
questions.
Squeeze expert here. Review pork.
I mean, we could look at indicators like the volume. We can look at the relative strength index. We can look at the MACD, and we could formulate, sort of, kind of guesstimate when we've reached peak, or can we? Absolutely not. Anybody who's telling you that they can find the peak is just outright lying. Now we have to look at what AMC is. For some, it's a lottery ticket. For others, it's an investment. Now, I do have a little theory here as to what is going to happen. So first off, we got the Diamond Ape saying the paper hands aren't going to let us get to 100,000, and possibly so. There are some naysayers that say, well, the paper handlers aren't going to let us get to 1,000, maybe rightfully so. Ideally, all we can do is hold. But wait, there's more. We could actually buy. And I'm going to illustrate to you the method I will be using when I'm trading AMC and the squeeze, and we're going to use GameStop as an example because
here we go
where the peak is. Now, with GameStop being an example, we had pre-market highs somewhere over $500, right? And then when the market opened, we peaked at 482, and then it dipped. And it dipped down to 112. You sell all your positions there, you're out of the game, right? You're done. You made your money. The thing is that if you sell your positions incrementally, you could have made more money because it dipped down to 112, and I believe it recovered all the way up to 300. Are we leaving money out on the table? Well, absolutely. So if you are going to hold all the way up to its peak, you are assuming that this is going to be a perfect apex. It's not. It's going to have its ridges. It's going to have its ups and downs. And for those who are saying, well,
he was right about that.
How do I know when the peak is? Well, you have to buy yourself an insurance policy. And what do I mean by that? We're going to get right to it in a second, but I do want to pay attention to this theory here of when we sell. So let's say the peak is 100,000. Who are we selling to? Now, I know a lot of you will probably leave a comment in the comment section and say, well, insurance is going to cover it. Have any of you ever got into a fender bender? You know how long it took for insurance to pay out? Do you really want your attendees caught up in a bureaucracy and with institutions, the whole entire financial institution where the goal is to save money? I don't think I want my attendees being caught in the whole financial system bureaucracy, right? We really have to go ahead and assume 100K is the peak, but we have to sell smart along the way up. Now, for those who don't have thousands of shares, you might have hundreds of shares. Okay, good. You know what? Just hold.
I wonder if he's been selling on the way down. Great buy, $1. Buy 100 shares. Review Dork is an example of what happens. Yeah, and various other drugs too, I think. Let's just, good Lord.
Take care of it for you. We're going to hold and we're going to play this game exactly the way the hedge funds think we're smart. But now let's go back, and you guys are going to witness my creative illustration here. Okay, we're gonna go ahead and draw this mountain here, and there you go. And the very top is 100K. So I currently have.
So this video is from April 25th of 2021, and that's what his visualization was for the squeeze. Let's look at what actually happened. And of course, this is going to be post split dividend. But here's what actually happened, right? Right there. So there's the review dork version. And he said this was 100,000. I don't know, just interesting. Looks like it's back to doing reviews on remote controls. Yep. I don't think they thought this through. I know they never thought AMC would be sitting at $6. Well, technically it's sitting at 817, okay? But it did get down to 505 on Wednesday, November 9th. So that's the local low point. What happens when we put the S&P 500 overlaid on this? And we can see that with a few exceptions. At least in 2022, that it has pretty much followed the same contour as the overall market. We could throw the Dow on there for comparison as well. Dow Jones. And some of the moves are less exaggerated. Some of them are more exaggerated. But in general, you've got the same type of thing going on. Each one of these little pops correlates to, you know, the overall trend in the broader market, right? So, of course, how could we forget this historic Dow rise? But you know, more locally here. So yeah, interesting. Okay, that's what he thought. That's what people were believing in April 2021.
100K. So I currently have 2,000 shares in the game.
2,000 shares.
Go ahead. We're gonna label each peak here. So we've got 100 here on the first peak, 1,000 on the next peak. We've got 5,000 on the next peak, right? All the way up to 100,000, right? And I have 2,000 shares, but guess what? I don't want to risk those 2,000 shares. With cryptocurrency, by the way, the cryptocurrency market wiped out $250 billion. We saw Bitcoin go from 62,000 to 49,000 in a matter of a day and a half, 2 days. Why is that getting liquidated? Well, I mean, I'm all about cause and effect. Don't need to be a physics professor to figure out why cryptocurrency is getting liquidated. Okay, so I have 2,000 shares. Current value of 2,000 shares is 20K, right? Now, we all believe, but we have the conviction that it's 100,000, which is our high, before you think I'm crazy about the whole 100K, before you think your fellow apes are crazy about the whole 100K, I really want you to think about this, right? Only 16% of the world population does not have a religious affiliation, meaning if you stood in a crowd of 100 people and said God does not exist, bad things might happen to you, or you might offend a lot of people. The thing is that when enough people believe it to be true, it is in fact true. And
what? Oh my God. Oh, that was the money line in this one. Holy shit. We got to go back. We got to go back.
God does not exist.
Oh, you got to hear the whole little vignette.
Okay, I really want you to think about this, right? Only 16% of the world population does not have a religious affiliation, meaning if you stood in a crowd of 100 people and said God does not exist, bad things might happen to you, or you might offend a lot of people. The thing is that when enough people believe it to be true, it is in fact true.
When enough people believe something to be true, it is in fact true. Oh dear. Yes, there it is. There it is. That is the that's the apex. That's the apex. It wasn't 100,000. It was actually that statement, that belief. Wow. And he says selling after it peaks is stupid. Here's why. Oh my God. I don't even know what to say now.
And so if we have enough apes believing that 100K is true, then guess what? We're going to hold it and we're going to manifest that truth, right? But
we're going to manifest that truth. Well, what happened? Everybody believed it. What happened? What the fuck happened? I guess enough people didn't believe it. I mean, seriously. You can't make this shit up. You can't make this shit up.
A lot of money along the way. We go back to the
That's Astro, by the way.
We got our price points. I currently have 2,000 shares. I plan on buying 200 more. Why? Okay, so I'm going to add 200 more shares. The reason why I'm going to add 200 more shares is because currently
full retard
of my portfolio sits at about $20,000. With that being said, if I buy 200 more shares, which at the current price are running me about $2,000, when AMC reaches $100, I have now recouped my investment. Now the fear of losing money, we take that out of the equation, right? Because what happens in the stock market? People are constantly fearing losing money. Okay. So at the $100 mark, I make my money back and I cash out. Well, wait, Gabe, aren't the hedgies going to need those shares? Well, see, here's the point of buying additional shares. Because if we're currently at the point where all we are buying are synthetic shares.
God, they were talking about synthetic shares in April.
The problem. So when we look at the problem currently, based on the 10-day average volume, the days to cover is somewhere at about 5, a little over 5. So our current situation is a perfect catalyst for the squeeze. But then we add to that problem, right? Because we buy 100 more shares or 200 more shares or however many shares that would go ahead and help us cover our initial investment, right? So we then sell off and we recoup our initial investment at 100. We probably will see a downswing to maybe about 60. Okay, great. So now to buy the same 200 shares back, ladies and gentlemen, it goes down to 60. What is that? $12,000? Okay, cool. Because now we're riding this all the way up to 1,000. So now, how much are your shares worth? Your 200 shares are now worth 200K. When we talk about GameStop and how it just dropped, and then it continued on, you're going to see that happening. But see, here's the thing. You're playing with your fake shares. You're not playing with your nest egg here. My nest egg of 2,000 shares has not been touched. I'm still playing with the additional 200 shares that I originally bought. And what these 200 shares are going to do, well, guess what? Ladies and gentlemen, if you wanted to buy a house, guess what? Those 200 shares on the way to the MULN of 100K, those 200 shares are going to go ahead and buy your Lambo. They're going to pay for your house. They're going to give you financial security, all while protecting your original amount of shares. So now we got it.
Emotional ass manipulation. Oh my God. It's almost over.
Now, this is when 1,000, 2,000, 3,000, 4,000, 5,000 becomes a reality. And so then I get to go ahead and sell my shares at a cool 5,000. If I want to exit my entire position, cool, right? If I want to exit half my position, cool, right? I mean, at least for me, I go in a calculator and what's 2,000 times 5,000? That's $10 million. That's 10 million cool dollars. Cool, right? Probably sell maybe a quarter of that, take 2.5 million, right? And then ride it on to the next stop. Next stop, and we go back, is 10,000, right? And this is all made possible by going ahead and buying 200 additional shares of funny money to play against the hedge funds who are already ass deep in synthetic shares, right? And this is how we get to 100K, and we do it by buying and selling.
How ridiculous.
With the play money that we just bought, or the play money shares that we just bought. Guys, if you think that 100K is not possible, it certainly is. If you really think that you're going to be able to sell on the way down, chances are the hedges have already gone bankrupt somewhere between the $5,000 and $10,000 area. They've gone bankrupt. Who's paying it again? Do you really want insurance to be paying out your tendies when you had a chance to make a crap load of money on the way up? I don't know. I hope this makes
what
sense.
insurance are you what insurance is he talking about anyway? Insurance? Okay, that was April 25th. Let's look at the chart. April 25th. So that was Sunday. It was a Sunday. Interestingly enough, it was a Sunday before this. And remember, these are squeeze adjusted. Stupid. Maybe Thinkorswim will do it properly. And we can check the futures too. Oh, good. Great. And the damn dollar. Okay. See if I think reminds me of the scene in the movie Dumb and Dumber. They keep putting the IOUs in the briefcase. Hedgies are going bankrupt. Hey, they made millions on short positions. Wow. Okay, so Thinkorswim shows it properly. Here it is. So it had just closed above 10, and it was getting ready to pop up to 11, and there's still a little bit of time before it would, get up here, about a month or so. Oops. Just right in this area here. Right over here. So, a reminder that had gone up to about 20 and change on the 27th, GameStop. and then had managed to make it back up to about 14 at this point here when the review dork made that video right there. So there was a little bit of excitement to come. Yeah. Here. And at some point, they pivoted to selling a moving average crossover strategy. If these apes would watch some of their old grifter videos and see how far off they were from reality. Yeah. Chad Hardy hearing something about squeeze on the blockchain. Anyone hear anything? I mentioned that earlier because Antoinette asked if the AMC had squeezed this weekend, and yeah, I heard that too, but I haven't been able to find any proof. But hey, why do we need that, right? So looks like we're having volatility in the connection again. Jesus. So what has he got? So his last video is from 2 months ago. Guess he doesn't need to grift on YouTube anymore. Inflation could be good for AMC and MOAS. Well, let's check that out. My God. This is from February 15th of this year. So 10 months later after previous video of his we saw. Here he is, a lot richer. Oops.
Spirit. What's going on, you popcorn tossing, meme sharing, conspiracy loving, moon bound astronauts? I know it's been a while. Haven't had an open house, and Jesus was showing me around. Sure as hell felt like it, but yeah, I'm feeling better. And recently I jumped on YouTube to see a whole new influx of new faces, right? The geriatrics who love cats, the ape father confirming he needs a mommy makeover. And Lou changing his name yet again. I really want to see Lou's name changed to Lou versus the Death Star. Bro, I don't agree with you most of the time, but your hustle, it's commendable. And apparently Matt Stoner got to witness Dwayne the Cog Johnson firsthand, but I have faith in Trey that thing isn't for personal use, right?
Yeah, right.
Right. Now, here's $1 million idea. Squid Games, Hooker Edition. Now, the market is ranging with a lot of investors simply sitting it out because no one knows what's going to happen between Russia and Ukraine. Now, the most recent news is cyber attack on Ukraine's defense and banking websites. And I can't help but to ask, Joe, Hunter, is that you? Then there's fears that the feds will
Jesus
jump in
Christ.
any second and raise interest rates.
He's a fucking retard.
$1 billion%. Now, I doubt it, but all of this has the major indexes behaving like a toxic relationship that you happened to take out to dinner last night for Valentine's Day, and then you still have blue balls. The boogeyman this year is inflation, but before we get into that, let's consider this. According to Lisa Su, AMD, go AMD, because you had me scared for a second. That dip tested everything in my testicles. But again, according to Lisa Su, the chip shortage won't end in 2022. Demand for chips surged 17% in 2021 from 2019, and median inventory of semiconductor products has fallen from 40 days in 2019 to less than 5 days.
Oh, remember when that was the narrative?
Which means you go to Best Buy, you're looking for something, just ain't there. They say, order it on the website, 22 weeks for delivery. And this is important because the world runs on silicon, not silicone, like Trey's dildo. But thanks to chip shortages, industries like the auto industry are seeing runaway pricing. And I mean, anyone want to buy a Jeep Wrangler with a Mercedes badge for a cool $250,000 because that's what G-Wagons are going for? Or how about a BMW without power seats for $5,000 over MSRP? I swear, there's a sucker born every day. Now, consumer prices have gotten out of control, yet real hourly earnings, which is basically wage growth minus inflation, fell 1.7% from January 2021 to January 2022. Now, a hawkish Fed, in my opinion, won't curb inflation until supply bottlenecks relieve themselves, bringing balance back to a supply and demand economy. Because after all, that's what
another idiot who doesn't understand the basics of economics.
The wage price spiral will continue, and it's simply the circle of life. Okay, wages go up, creates more demands for goods and services, drives up prices of those goods and services, and eventually circles back to wages. People begin to say, well, hey, I need a raise. The rent's too damn high. This is inflation, and it's a constant cycle. Sure, consumers would love a deflationary period leading to the golden age and prosperity, sort of kind of like in the 90s under the Clinton administration. A lot of happy endings for him, a lot of happy endings for the American public. But when you have wages outpacing rising prices, what tends to happen? Well, companies attempt to protect margins, right? Or one of two things. They protect margins in one or two ways, rather. One, massive layoffs, or two, pass the rising cost of goods and services to the consumer. Again, the circle of life. Now, let's talk AMC because this makes a lot of sense now. AMC received investor commitments for a new $950 million bond deal, and that will help it pay off maturing debt currently, and the new bond will carry an interest rate of about 7.5% and extends the maturity by 4 years all the way out to 2029. So currently at 2022, and that gives us about 7 years, a 7-year runway. AMC fundamentally looking really, really good. Now I want to drive this point home. Fixed rate mortgage holders are usually winners during inflation. You see, the debt is fixed and you're paying back with devalued dollars. So whatever debt AMC is accruing, they will pay back at a future date with devalued dollars. Make sense? Now, while inflation will naturally find itself back down to 3%, the Fed's warned that we will not see any normalizing of inflation for another 3 years, meaning this gives AMC the opportunity to play the inflation game, increasing the price of tickets and things like popcorn. So, you know what, guys? Let's go ahead and look at the chart. Before we get into the chart, guys, Jim Simmons' Rentech fund nearly doubled its AMC stake, reinvested in GameStop, and trimmed its Tesla bet last quarter. Now, if you don't know who Rentech is, it's basically one of the biggest and best performing hedge funds in history, and it was founded by Jim Simmons, a former NSA codebreaker and MIT math professor. The quantitative fund trusts algorithms to decide many of its trades, resulting in significant changes to its portfolio each quarter. So essentially, the fund is fighting algo with algo. This makes me absolutely bullish. Now let's go ahead and look at the chart here. We're going to open up Webull. And what we're looking at is AMC on the 4-hour. Now, why do I like to look at the 4-hour? Well, we have the 1348 and we had the crossover, which happened February 9th. And you could see that price action has steadily made its move upwards, approaching the 200 EMA. As it stands, the 200 EMA sits at about $21. This will act as a point of resistance. Should AMC break this, well, guys, you know what that means. Boom, boom candles. But let's go ahead and look at it on the 1 minute, and we could see throughout the day. Again, we're using the 13 EMA to track price action, and you could see there was a lot of momentum in the morning here or into noon hours, then we
Well,
flatlined, which
guess
is
what
very, very
happened?
common for stocks in the lunch hour period. And then here we go. We made a strong move to the upside. Now we go ahead and we talk about the SPY, how AMC likes to run with the SPY.
Huh. Yeah. Here you go. Maybe this is it. FTX investors are squeezed by U.S. for information on firm and Bankman-Fried. Is this the squeeze? Probably not.
Even though you were able to get money off the exchange, you still had tens of millions on the exchange when it comes to FTX trapped there. Sam Bankman-Fried has been pretty vocal in the media the last couple of days, let alone since the crash had really started to happen. The question I have for you is, what do you still need to know? What hasn't been said that needs to be made clear?
What hasn't been said?
You know, it's kind of surprising that his lawyers are letting him speak. Having watched his two interviews, the word delusional kept coming into mind, right? That he's in a reality that's not real. A lot of narcissism, a lot of grandiosity. But the reality is, like, Sam and his cohorts perpetuated a fraud. They used customer money to make bets that he poorly risk managed after he made them. Let's forget about the risk management. The problem was he took our money. And so he needs to get prosecuted. The authorities need to dig in and figure out exactly what happened. People will go to jail and should go to jail, I think.
Mike, on fraud and on the idea of him going to jail, the reality is that authorities have not convicted him, have not charged him of anything.
I agree. You're innocent until proven guilty in this country. I'm just,
what
from what I'm
evidence do you
seeing,
have that others might not be seeing? Do you have evidence that others may not be seeing that this was indeed?
Sonali, there's $9 billion that seem to have been moved out of the exchange into his personal accounts. Like, you don't need a whole lot more evidence than that. But I'm not a prosecutor, and you know, he will
probably not. But let's do this. Let's finish this
and
real quick.
You could see it was fairly identical with exception to this dip. Now we do see overall market sentiment bullish because the conflict in Ukraine and Russia is pulling back their troops. But let's go ahead and go back to AMC here. And what we're seeing, again, we see these crossovers on the 1348. And this is how I keep my conviction in the play. I go ahead and I zoom out to the 4 hour here. And again, what you guys saw was the crossover already happened, making its approach to the 200 EMA. But we're also seeing something awesome happen on the daily. And that is the 13 making its way, converging to the 48 EMA. Now, you guys know I'm very, very pro 1348 EMA. We have over 9,000 members on our Discord who are absolutely making money.
9,000 members. 9,000 fucking members. Wow. Where's the link to it, though? On Patreon. Well, that page is missing, apparently. Wow. Really? His Patreon's dead? Huh. Discord. They don't like when I talk about these guys. My connection just keeps going to shit here. That's crazy. May have to go check out the secondary server. This is absurd. So I don't know why it's in euros. $13.48 crossover. Patreon. $50. Let's just call it $50. Wherever it went. 9,000. Jesus fucking Christ. So, I mean, you're talking about $500,000, basically. Trying to find a legit source. Maybe SEC came calling on Review Dork to shut down shop. That would be pretty sweet.
If you want
Inflation's
to
good
join
for
me on
AMC.
Discord via Patreon, I'll include a link down in the description. But guys, inflation, they make it out to be a very scary thing. But I think that as long as AMC just secures its liabilities, they can go ahead and ride this inflation train all the way to profitability. And
he was wrong again. Look at that.
We don't know what's
Wrong
going
again.
to
Wow.
happen in the future or the near future, but we do know that the Feds are at the very least going to raise interest by 50 basis points March 16th. Again, this bodes well for AMC stock. Another thing that people tend not to talk about is that inflation eventually finds its way into the stock market as well, right? The price of everything goes up. So, you know, I really look forward to that. And again, I am absolutely bullish on AMC, also considering they went ahead and purchased a Cinemark theater in Chicago, I believe. Took over that lease, scheduled to open later in the year. So AMC is definitely taking a very aggressive and offensive approach to the shorts. AMC closing up nearly 10% at $19.48, up $1.72. There's really not much more you can ask for, guys. This is Gabe with the Review Dork. I'm signing out. Peace.
Okay. Just funny, like I how wrong can somebody be? Okay. Let's check this out here. Okay, so since we're talking about FTX a little bit, I don't know if people have seen this yet, but and there's really nothing new here, but it's still interesting.
And he hated it so much that he left within minutes, in part because he didn't know he would be interviewed by me. He thought he was being interviewed by someone else on Twitter. And I snuck up in the DMs and got on the call and started peppering him with some harder questions. And within minutes of that, suddenly Mr. Open and Honest decided he needed to leave. But I didn't let that stop me because I joined an interview the very next day doing the exact same thing, ambushing him again, and I got some pretty good answers out of it. I think the...
Okay, let me... I don't know what the hell is going on here, but okay. May have stabilized again. All right. So I'll be right back. I got to check some laundry, but check out this CoffeeZilla clip.
With this whole press.
If
I interviewed Sam Bankman-Fried.
Let's try it again.
He hated it so much that he left within minutes, in part because he didn't know he would be interviewed by me. He thought he was being interviewed by someone else on Twitter. And I snuck up in the DMs and got on the call and started peppering him with some harder questions. And within minutes of that, suddenly Mr. Open and Honest decided he needed to leave. But I didn't let that stop me because I joined an interview the very next day doing the exact same thing, ambushing him again, and I got some pretty good answers out of it. I think the running theme here is with this whole press tour, he's going with this image of, you know, I'm embarrassed, I made a mistake, but I'm here to be open and honest now. But that's not true, because when you actually hit him with some hard questions, suddenly meetings come up, suddenly he can't talk, suddenly he's just Mr. Ums and Ahs. So I wanted to show both interviews. I think they're very interesting. I really wanted to press him on this $8 billion that mysteriously went missing that he didn't know about. And I'm sure I'm going to be breaking these down more specifically in the days to come. But for now, I just wanted you to enjoy these unedited conversations with Sam Bankman-Fried that he didn't know we'd be having.
CoffeeZilla, the mic is yours, man.
Hey, thanks for having me. I just wanted to quickly ask, so there's this big question about this $8 billion that went into some kind of a stub account. If I just want to get some clarification on this, from my understanding, what you're basically claiming is that back when FTX didn't have banking, you'd use Silvergate to have people to wire money to Alameda Research and then credit them on the FTX side, but you didn't actually account for that money going back to them. So essentially you had like $8 billion coming to FTX you didn't have on the books, technically. I mean, can you explain more how that worked? Because it seems like such a key part of this whole thing. And so far we've gotten like very vague things about stub accounts. Just try to be as specific as you can on how that actually happened.
So, and again, some of these are things I'm trying to piece together that I don't have the full answer to, but I think that part of it was, I believe that there was, correct FTX accounting, in terms of, the audited financials, but that at least I can say that when you sort of pulled up, on a dashboard, what the accounts look like, it would not have, it wouldn't have displayed, those transfers, and it wouldn't have displayed the balances related to those, which meant that it was, that the sort of what you would naively see as the relevant, it's the relevant sort of position size was quite a bit smaller than what the full position size was.
Specifically, you're talking about the funds that went into Alameda that was credited to on the customer side on FTX. Yeah, you're saying that basically when you looked at your dashboard, Alameda was using those funds to trade perhaps, but that ultimately you couldn't see that on the Alameda side because there was some kind of an accounting problem where there was a mix-up with where it was credited. Is that the story?
Yeah, it's something roughly like that, or at the very least that the common displays of it did not include that piece of the accounting.
A real quick second follow-up. So I've talked to a few Alameda insiders, and I've kind of run them by your story of things. I think you probably are aware. I'm pretty skeptical. And one of them, when I told them could it be that Sam wouldn't know about this? Somebody who worked with you, and they actually they laughed and they said, "There's no way he's claiming to be stupid now when he was like this genius wonder kid." And so my sense of things is, how do you explain this? How do you explain the fact that some of the people who worked with you for years, your employees, have come out and said, there's no way he didn't know about these backdoors. There's no way he didn't know what Caroline was doing when you guys were very close. The offices were right next to each other. I mean, how do you expect us to believe this story you're spinning?
I mean, I don't know what to say. I had a lot going on, and I was spread thin. I was a bit less grounded than I had been before, and I lost track of a lot of important things. And I think that those
hang on one second. I think spread thin is one thing, right? I think, things can get out of hand, but we're talking about a fundamental understanding of whether Alameda was commingling funds with FTX. I mean, I saw your Stephanopoulos and Sorkin interview, and you're pretty categorical that you had no idea that you were mingling funds. So that's what I'm asking about, not did you know exactly what was happening on November 7th or 8th? I mean, I can understand sort of things getting out of control, but we're talking about the most fundamental grasp on how your business worked. You're telling us you had no idea.
I was not aware of a lot of what was going on. I was vaguely aware that some of these systems existed. I had no details of them, and I was not spending much time and on
not spending much
looking
time.
at, you know,
Why
position
not?
risk management. It was a big
It's
mistake.
your fucking job.
I mean, you're right.
Right, Sam, I've just got some.
Imagine anybody saying that shit at their job. You know, and they managed to lose the company a couple $1,000s. How would that go over? We're talking billions here. I mean, this guy is so full of shit. It's not even funny. It's not even funny. And it is a perfect example of white collar criminals and the difference in treatment. Starting with the New York Times and other media outlets, treating him with kid gloves. It's disgusting. It's ridiculous. It shows it's a perfect example of the hypocrisy and bullshit that basically forms the foundation of our financial system and society in general. If you ask me, it is absolutely ridiculous, absurd. And you're talking about crypto, where it's regular people who've been sold a dream of achieving financial freedom. Put your money on our platform, deposit your paychecks on our platform, etc. Not financial institutions, not hedge funds, not institutional investors, not high net worth individuals, regular people. So I'm disgusted, quite frankly, by all this. And he doesn't say anything new. He says nothing new in this. It's all the same shit. All the same shit. This stuttery, you know, like and again, yeah, total bullshit. Complete and utter bullshit. No question about it. Now, as far as theories go, let's check this out. I saw some of this last night. Let's check out this interview. Okay. Now, I got to figure out what's going on with this damn. What the hell? Okay. We may be better now. Okay, Mark Yusko is a hedge fund manager, founder, chief investment officer, and managing director of Morgan Creek Capital, a University of Notre Dame and University of Chicago graduate, active since 1993. Just as some background on who we're going to be listening to here. Okay.
The day, literally 24 hours after Bernie admitted to his son that he, had perpetrated a big fraud, he was in handcuffs. And, he was my neighbor here in North Carolina for a number of years before he passed, in prison. So look, the fact that SBF is on a press tour and not in a jail cell is incomprehensible.
As if the SBF FTX saga couldn't get any weirder, Sam Bankman-Fried is now doing a media tour, with major outlets giving him a platform to explain what happened with FTX. This is a stark difference between that of disgraced investor Bernie Madoff, who was in handcuffs just 24 hours after his Ponzi scheme was exposed. Across his media tour, Bankman-Fried continued revealing some eye-opening revelations, most notably stating that as far as Alameda Research is concerned, he wasn't running Alameda, and that he didn't know exactly what was going on.
Nonsense.
At this point, it's extremely difficult to believe anything Bankman-Fried says, as he openly said on Twitter that he basically told everyone what they wanted to hear and his altruistic persona wasn't real. None of this adds up, and Mark Yusko called it out. In an interview with Kitco News, Yusko questions everything that is going on with SBF and FTX, and because of his media treatment, he believes there is something bigger going on than Sam Bankman-Fried. Let's listen to what Mark has to say.
Look, again, supposition, no direct evidence, but supposition that, look, we're in the third phase of what I'll call the 4 phases of digital asset adoption. So it's the famous Gandhi quote, right? First they ignore
And I didn't realize.
then they laugh at you, then they fight you, then you win.
I didn't realize I didn't realize that was actually a quote by Gandhi before Elizabeth Holmes took it and used it. But interesting. Let's see here.
And
go back.
Digital asset adoption of what I'll call the 4 phases of digital asset adoption. So it's the famous Gandhi quote, right? First they ignore you, then they laugh at you, then they fight you, then you win. And, from 2009 to 15, when digital assets were created and Satoshi Nakamoto created Bitcoin and then other assets followed, they ignore you, right? It was like a bunch of nerds and geeks playing with their magic internet money, whatever. Then they laugh at you. So 2016 to 21, a bunch of nerds and geeks playing with their magic internet money. Oh, look, one of these nerds and geeks actually named the Miami Stadium. Okay, big deal. 2022, we entered the then they fight you phase. And it started in May, right, with the Luna debacle. And literally the morning after the Luna crash, Janet Yellen was on television saying, in prepared remarks, we need regulation of stablecoins. That was prepared, right? So something didn't fit, that she was so prepared in real time to make that statement. So then you have a number of intimations about regulation, and at the end of the day, well, and it actually can go back even further to the attacks on the lenders, Celsius, BlockFi, Voyager, not the FTX rescues, but the attacks by the states and the SEC. And look, regulation has been used against disruptors for centuries, right? It's not, in New York City, there was something called the red flag law, right? When the horse and buggy was transitioning to the horseless carriage, the horse and buggy manufacturers lobbied.
I remember those days.
The town council to pass a law that said if you had an automobile, you had to hire someone to walk in front with a red flag. That's where the term red flag comes from. You don't see anyone in New York City walking in front of cars with a red flag anymore because it was stupid. And we don't see many horse and buggies except in Central Park. So it didn't work. And so regulation is a tool used by incumbents. And what does blockchain technology do? It replaces trust with truth. Well, who are the arbiters of trust today? Financial institutions, third-party middle people, $7 trillion industry. Okay, they would like to not be disrupted by DeFi and digital assets. So it's possible that some group of incumbents might have tried to lobby for regulation to delay, obfuscate, change the course of the disruption, perhaps. So that's what it's possible. Look, it's probably not a surprise that a kid, and I say a kid because he's younger than my son, a kid who really had no experience in lobbying, no experience in politics, no experience in running an exchange or a trading organization, no real work experience to speak of, a couple of years, suddenly becomes an expert in trust law and exchange operations and arbitrage trading, and becomes the largest donor to Joe Biden's election campaign, second largest donor last year to the Democratic Party. It's not shocking that his mother runs one of the largest PACs, secretive PACs, that the Silicon Valley elite use to kind of get around campaign finance laws. That's not surprising to anybody, perhaps. Is it a surprise that his father went to Yale Law School with a lot of people who are in government, and perhaps is a known expert on trust law? Interesting. Advisor to some of the regulatory agencies. Caroline's father, the head of the economics department at MIT. Her dad was Gary Gensler's boss. Again, all of these things just they paint a really interesting picture. And I said,
entirely possible, Lynn.
Have nothing but the utmost respect for the SEC. I think up to this point, and I will say up to this point, and particularly under Jay Clayton's leadership, they were measured, they were consistent. They consistently said, this is not a security, this is not a security, these other things may be securities. I thought they did a great job. They didn't come out and say, oh, everything's a security. They didn't say, oh, we're going to try to ban it like China did. So I actually think the SEC has done a really, really good job up to this point. But there's something funny about two kids with no experience and clearly no ability to run this complex business, then turning out that half of the companies that Alameda invested in are shell companies owned by SBF 100%. Like that's a funny thing. That's when I make an investment out of our venture fund, I don't own any piece of them ever. That would be a total conflict. So the fact that half of the 400 companies are shell companies that he owns just seems odd. And the other thing that's odd, I've been doing venture capital a long time, 35 plus years, got the white hair to prove it. Never, not once have I ever seen a situation where a person invests hundreds, $250 million in venture funds, and then the venture funds put $150 million into that person's company. Maybe it's happened and I just didn't see it, but I've never heard of that ever. So, and then the last part of it is the relationship with Ukraine and Zelensky is very odd. Right? Yeah. Money going straight from Ukraine and Zelensky to FTX, that money vanishing, personal loan to SBF, massive donations to Democratic Party. And here's the thing, in the olden days, if you and I got together in a park and I brought my backpack and I put on the bench next to us and then I walked away and you're like, Mark, your backpack, and you looked inside and it was full of cash, no way to trace that. If you actually sent all this stuff through digital assets, people can trace it. So it's not conjecture that Ukraine sent money to FTX. That's not conjecture. Yeah. It's fact. So it's not a conspiracy theory. It's fact. Now, the part that's missing is how the money got from customer accounts into Sam's pocket to make the political contributions. That's a little bit unclear, but that's where the fraud comes in.
To watch the full interview, check out the link in the description.
Okay.
What do you think of Mark's thoughts here?
What's the, this is a, what's it called? Theoretical question. What's a bigger scam, FTX or established titles? Don't answer that. But so the deal with the Chris mentioned the 1 million a day on arbitrage trading. So let me get this. Oh, it's no longer available. Huh, interesting. Okay, so there existed or exists, but existed a gap in the prices in South Korean crypto prices in their exchanges compared to other exchanges globally. So they call this the kimchi premium, the difference. And so this is what one of the things that Sam Bankman-Fried was employing, this kimchi premium arbitrage idea. So unfortunately, it looks like it says here. It first appeared in the market in 2016. Between early 16 and 2018, the kimchi premium averaged around 4.8% and was as high as nearly 55% in January 2018. Right? I don't believe that it mentions Sam Bankman-Fried in this Investopedia article, but that's the deal. I believe he also did it in Japan, and I think the Japan opportunities have dried up. But yeah, much like established titles. Okay, so let's see what we got here. Oh, yay. We got 10-year notes still taking a nosedive and equities going to the moon. Dollar also going to the moon. So this is one of these, one of these moments. It's like, okay, all three of those things can't be happening at the same time. Really. I mean, they can, but what does it mean, Pee-wee? Okay. We'll come back and check on that in a minute, but equities up, 10-year notes down, dollar up, volatility coming back in. Okay, well, going to be another fun week, it looks like. Common Sense Investor put this video out yesterday. The Marine and Naked Truth and AMC Squeeze update. Check it out.
What's up, everybody? It's the Common Sense Investor coming at you with another video. In this video, I want to talk about the American Civil War and AMC retail investors. I want to talk about the Civil War. All right. That was the most bloodiest war we've ever fought. We lost more lives in that war than any other war. It was son against father, brother against brother. All right. And
yeah,
it is
here's the history
one
lesson.
Of the worst times in our history. Wish we could have fixed the problems that they were dealing with back then without a war between each other. But it didn't happen. All right. So that's the background of the Civil War. Let's come over here to AMC. We got the same problem over here, people. We got brother against brother.
Same problem.
Father against son, age-wise. And we want to have strife and bitterment and fight. And I was watching this video here by the Marine, and then inspired.
And more people dead than the Civil War.
This video. Okay, so Marine, this one's for you. All right. In this video, he's talking to the Naked Truth people. Heather Roberts is the treasurer of Naked Truth. I've sent an email to them and asked her to contact me. We'll talk about that in the next video. All right. But in his video, the Marine made a statement. He said that he didn't always get along with people, but he puts that aside for the betterment of this movement. Good video. And
good video.
I like what he had to say. And he's basically calling for a truce with the YouTubers and the community. When I say community, I mean when people go live and you got people who want to argue in the chats with one another instead of standing in solidarity. But let me tell you something else about the Marine. And he's asking for forgiveness of the people that he's talked shit about. And I'm one of them. So, Marine, I saw your video. And yes, of course, the shit you talked about me when you started your channel, I didn't pay it no mind. I thought it was funny. So, I can work with you, dog. I can work with you. But before we can work together, there's a couple things I think you should know. And everybody else should know. Okay? The Marine is what I call a third generation YouTuber. Okay, first generation YouTubers for AMC were Roaring Kitty, and then Trey Trades and Matt Kohrs and all them.
Wait a minute.
Masked Investor. First generation YouTubers for AMC were Roaring Kitty, and then Trey Trades and Matt Kohrs.
Roaring Kitty. Did he ever talk about AMC? I mean, correct me if I'm wrong, but what didn't he talk about GameStop? Not the same.
And all them, Masked Investor. And then I came in, and Frankie Muhammad came in. Well, Frankie's kind of like in the middle between second and third generation YouTubers. But the point is this, people. I started my channel because I got so frustrated with being in this play and nothing was being done. So I tried to put together what I called a town hall meeting 7 months ago. All right, 8 months ago, actually. And here's the video that I did. All right. And the reason I say that Marine is a third generation YouTuber, I'm going to tell you about the third generation YouTubers in just a second. But right now, I want to focus on me when I started my channel and I was trying to get a town hall started.
Oh, me for the meme stocks.
I reached out to the first generation to speak at my town hall meeting for AM. Jackson Hunter had agreed to come to the town hall and explain to everybody that would be there, all the shareholders that would be there, what failure to delivers were, how they worked, and how they were used.
Oh dear, failure to deliver.
Aron ain't gonna be there. Fuck it. And they did. They all canceled on me. And I was devastated. And I said, all right, you motherfuckers, I'll learn it on my own then. And I went to work, and I've been studying ever since. I've been in MIT fucking classes, people, learning about fucking algorithms. All right? Because nobody would help.
Nobody would help.
Eastern, 10 o'clock Central. At that meeting is going to be this, well, I shouldn't say. We're going to have a CEO of a company that everybody's invested in that's going to be there. I'll give you a clue. They wear a rocket pin on their suit in every video they do, all right? So y'all go look and see if y'all can find out. What CEO wears a pin, a rocket pin, on their lapel in their videos? They're going to be there. We're reaching out to AMC. Al's reaching out to AMC, and he says, Adam, if you're
we'll have to check this out.
Can you please send Sam?
Was that Friday?
On the 9th
Friday.
of
Mark
December.
your calendars.
I'm reaching out to Mr. Donahue.
Oh, my God.
Donahue. I was amazed when I went to researching. Well, we'll talk about that in the next video, Mr. Donahue. I'm going to do the next video for you. But for now, Marine. Welcome to the fight, buddy. You're fixing to get a whole lot of shit for the things that you want to do. And I just want you to know, I got your back. As long as you are about moving.
All right, so that's what we take out of this. Friday night, we got something to do now. Okay. Okay. Well, since he mentioned him, the hell. So finance news is back in full swing. God. I honestly thought we were out of the water with that one. Here we go. Here he is. Speaking of Donnie.
This is not financial advice. It's not legal advice for entertainment.
Look at him on an airplane. Where the hell is he going?
Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff.
Listen.
So you get videos, I put them out. So you don't think and see I'm analyzing that data, but like I tell every data release us is false. Listen, they don't want us to know how terrible the market is. But the thing is, they can, you know, they can pay the media to put bull.
They don't want us to know how bad the market is.
Shit out there, but they can't hide the data. The data tells us everything that's going on.
You just said the data was false. He just said the data that retail gets is false.
That's false. Listen,
right there.
Data, but like I tell every data release us is false. Listen,
the data they released to you is false. Okay.
They don't want us to know how terrible the market is. But the thing is, they can, you know, they can pay the media to put bullshit out there, but they can't hide the data. The data tells us everything that's going on.
The data tells us everything that's going on, but the data's false. Okay. Not sure. This has got to be a new record. debunking oneself in 30 fucking seconds. Jesus Christ. That's
to put bullshit out there, but they can't hide the data. The data tells us everything that's going on. The fact that most of the major players are laying off a substantial amount of employees tells me that they know that there will be a major drop in revenue going into 2023, and they are planning for it. Okay? HSBC laying off employees. Citigroup laying off employees. Wells Fargo laying off employees. Barclays laying off employees. JP Morgan laying off employees. Deutsche Bank laying off employees. And the big dog, Credit Suisse, is planning on 9,000 layoffs between now and next year. 9,000. So if this is happening in the banks, what is happening in the broader market? Okay? What is happening in the broader market? They know that they are done. They know that we're in a recession.
They know that they are done.
And everybody who's been shorting AMC and GME, they're hanging on by their fingernails. And as liquidity dries up, they'll be forced to sell their long positions, and then they'll have to cover all of their shorts. And AMC, GME, and all the other mem stocks are gonna go to the moon. So when these guys are telling you that everything's okay,
yep, that's it. That's a good old narrative right there. When the stock market crashes, they'll lose money on their long positions, so they have to cover their short positions. But it's garbage. It's total garbage. I mean, it's like he thinks that institutions and hedge funds are just sitting around waiting, not doing anything. I mean, not to mention, we're talking about hedge funds. So, don't you think that they're hedging? Don't you think that they're aware of what's happening more so than this clown? I mean, it makes no sense. But it's gonna take them by surprise, and they're just gonna have to, liquidate everything, and AMC is gonna go to the moon. I mean, where do you come up with this shit?
when they tell you that the market is fine, when they tell you that they're only going to raise it a 0.5 basis point because everything is all doves. It's not hawkish anymore, it's all doves. When they tell you that, in my opinion,
not really.
It's nonsense. That is bullshit. Anyway,
Spirit Airlines. Oh, he's on Spirit. There you go. There you go, Antoinette. He's on Spirit. Yeah, hilarious. Oh my God. Better wrap up the video.
We have a completely full flight this morning. Please ensure that you're seated in your
tell me what you think
on your
about
boarding passes.
all these big dogs firing
way down
employees,
the
but want us to
aisle,
think that the
please
market
take
is
your
fine.
seat to your
You have a
right,
great day. God bless. And I
to your
appreciate you on
left.
this journey with me.
I'm curious if Model 3 dude knew that this was going to be on Spirit Airlines, or if he just made that joke. That's pretty funny though. Wow. Secrets, the GTII and AMC squeeze connection. Let's see here. What the fuck is he wearing? What is that? Okay. We already got this video up here. I normally don't give this guy any attention, but since they're talking about 4.4 billion AMC synthetic shares, let's.
Is this the proof that there are billions of AMC synthetic shares? Hello, beautiful
Well, let me stop you right there. Probably not.
people. Shalom, money makers. I want to talk to you guys about AMC stock. We have seen in the past week two things that could indicate to us that there are billions of AMC synthetic shares out there.
I'm all
potentially, right? We don't know for sure, and we'll explain why. We'll also talk about AMC stocks action on Friday and what we can anticipate with the stock market and AMC going into this week. All I ask is that you give me a beautiful smile, click that like button, and let's dance straight into it.
No.
$17. AMC was able to finish up over the resistance level that we had charted out, right? Which was around $8 810, 812, around that area. You can see that when AMC opened up on Friday,
I don't
the
care about
price of
this.
AMC got pushed down.
We know how
and
we
then
know how to look at a chart.
Came back down.
Let's hear about the
and I think
synthetic
it
shares.
was 13% the 7 area where it was. We've seen these kind of days where AMC had skyrocketed for FTDs, and we'll talk about that down. But going into next year,
blah,
so
blah,
I
blah.
wouldn't be surprised if we test again the 4,000 level, and the big money are just.
Where's this synthetic shares? Come on, wasting our time here. Okay, maybe.
Could be the huge tool that AMC will use to raise money. Coding
Now
going on, which is, tells us that it's there's a lot of manipulation. The algos are pinning it to $1 because they're afraid that there might be something that this could be the huge tool that AMC will use to raise money. Now, interesting scenario here where if you go and you type Yahoo Finance, I also saw another place, I think Apple Finance. If you go and you type APE and you look at the market cap, it says 4.4 billion. Right. So if you go and you do AMC, right, you're going to get the same market cap. Now, this could mean two things, right? AMC is 4.19 billion, not the same market cap. Sorry, right? I misspoke there. It's not the same market cap. That's what I wanted to emphasize. So this means, right, either two things. Either their code is not looking at the right place, and however they're calculating the market cap is incorrect. Or two, they're doing this correctly, and there is actually 4.4 billion APE shares out there, right? We talked about the possibility that there could be many APE shares out there. We're not sure how many were allocated, but AMC's company should know how much the brokers allocated, right? I don't know. Maybe they should get some notice from them, right? It's a whole thing. They were making, had to sign a thing that that you're getting the APE and all that. I remember when I got it. Maybe my APE is not real either, right? But could this indicate that there is 4.4 billion synthetic AMC APE shares, right? And that
I don't think so.
Flip side says that there was 4.4 billion AMC shares, right? So could that be? Well, we saw that FTDs increased dramatically this week when you got it the very day of FTX collapse. They had, if you remember, a tokenized stock where we don't know what was going on there.
No, they didn't.
And recently, right, on 8th of
No, they didn't.
November,
what are you talking about?
1.5 million FTDs when the price of AMC was still at $5.33. And before that, it was very low, 50,000, 60,000. And we just learned on a space call last night that Sam Brinkman-Fried, he said that they didn't have real Bitcoin. Basically, what they were doing was creating an IOU or a fake Bitcoin, and that's what they were giving to the customers. So it wouldn't be out of the ordinary that they would do this also with AMC, and they would be creating all these fake synthetic shares for AMC using their good friends, the market makers, and doing things like that. So that could be another.
Oh my God. Yeah, sure.
Scenario where FTX created millions and billions of AMC synthetic shares. So we don't know for sure yet, but this is just, more and more indication that this could be a possibility. And this is why the hedge funds are so afraid of APE, right? Because if this starts coming out and APE would be at a high price, AMC could very easily, right, sell APE shares, right, and raise a significant amount of money. Think about it. Now it's at $1. So if he does another 400 million, he releases another 400 million to the market, or even more, $1 billion to the market, they'll raise $1 billion, right? But if it's at 5, right, then he'd need only 250 million to get $1 billion, right? So it's very, very scary for the short sellers that that kind of scenario is going to happen. And if we take a look at the ortex numbers, we can see that the short interest on AMC continues to go up, and even the CTB average is pretty high, right? It did come down with the price of AMC going up a little bit. We saw that the shares on loan decreased.
Short score 89.73. 89.73. Live short interest is down 2% to 20.81%. Wow, look at that. Returned shares 21 million. Okay. Well, when did this video come out? 23 hours ago? Yesterday? Okay. I believe it. I believe it.
Tiny bit. It makes sense.
Yeah, sure does. Short interest isn't even $1 billion. Okay.
Because when the price of AMC was going up significantly from 5 to 8, there's going to be some short-term short sellers that decide to close their position or to get out, or they're lost, or even get a little bit of a margin call. But that's on the short-term one. It's not people that, the big money. It's more like some day traders or swing traders that go short.
No, actually, when it hit $8, a bunch of shorts took positions.
And
why do you think it went from 5 to 8?
See a big movement, so they start returning the shares. But it will be very interesting to see what's going to happen with AMC stock and how this is going to play out.
Not really.
Hey guys, welcome back to another video. In this video, we're going to be looking at AMC Entertainment, ticker symbol AMC and APE. In this video, we are going to be looking at how it's getting more expensive for hedge funds and family offices to be paying and holding the risky assets such as AMC FTDs. And we're also going to be looking at the positive cash flow for AMC.
How they hold AMC
and
FTDs?
Many more in this video, so make sure you guys watch until the very end. As always, we're going to take a look at the chart for AMC. Now, of course, for those of you who haven't watched my Sunday Outlook yet, it's a video where I talk about what I expect to see in the week and what I want to see in the week. Now, I've already said that today was going to be a very important opening, because today I feel like for Monday it gives a lot of decisiveness in terms of what we're going to be seeing going throughout the week. Just like I said in our previous video, we talked about how the NASDAQ futures was in the red, so we may actually be seeing more selling coming in for Monday, which will affect overall market and would slightly affect AMC as well.
Last week. Oh, god damn it. Yeah, so don't listen to any of that. But I never care what they say about the charts.
But the first thing we're looking at is Credit Suisse 5-year credit default swap has reached all-time high at 398 basis points, which basically means that it's getting even more expensive for them to pay insurance premiums against debt default linked loans given out to hedge funds and family offices.
Wow, that's quite a leap.
Assets like FTDs in AMC. Which is, again, Credit Suisse, we have talked about how they have, of course, loaned out, these money to hedge funds and family offices, which are, of course, shorting AMC. We've also talked about how they have one of the biggest dark pool for AMC as well. If we take a look down at what else it says is, not an isolated event. They're all tied to the underlying scam on which the entire US financial system is based. The game of liquidity pumping played by the Fed to sustain bankrupt firms on Wall Street and scammer like SBF is coming to an end. Liquidity is not solvency. And so, the first big thing we're of course looking at here is how it's because it's becoming more and more expensive. Now, the reason why this of course is important is because the ultimate aim for AMC squeeze is of course needing the firms who are shorting AMC to be of course covering their shares. And of course there are many ways to be doing that. Some are saying DRS, some are of course saying, buying APE, etc, etc, etc. Of course there are many other catalysts, but the ultimate goal is just to get them to be covering these shares. And
Good luck.
with prices getting more and more expensive, and we'll also be taking a look later on at the cost to borrow, with price getting more and more expensive for these firms and paying expensive, of course, premiums, it will drive and give an incentive to be covering these short shares. Now, I definitely think that this is the first step towards more and more firms being pressured. We're definitely going to be seeing in terms of a decrease in the short pressure for AMC because of the expense it costs for them to now be shorting AMC. Now, will it mean we'll instantly be seeing shorts covering? I don't necessarily think so, but like I said, it does actually reduces the amount of pressure we are facing for AMC because of the fact it's getting more and more expensive.
What else you got?
Why buy price 196? They expect the next one will be reflected of the price that they should be. Now, the next thing we're going to be looking at is, of course, the positive cash flow. So for AMC, they expect positive Q4 cash flow, paid off 470 million deferred rent down to 996 million with 50 million Q4 reduction plan. So ended the Q3 with 896 million liquidity, reduced debt principal by 444 million, closed 106 locations, but added 47, which now outperformed the close 106, and year to date has positive 32 million EBITDA. And so that is, of course, the fundamentals for AMC.
Wow, that is a positive spin, I'll tell you. Positive cash flow, I don't see how that's possible. Even just looking at the box office numbers. Let's see the box office numbers. Here's some box office numbers. Oops. Let's make that bigger. So here's the Black Panther movie. Domestic is about 300 million. And remember, this is for all the theaters, not just AMC, of course. And they don't keep this whole amount, of course. So Thursday was 1.8 million. You're talking about 4,000 theaters. I mean, an average of about $400 per theater. Wow. Seems a little bit low. Thought I had let's do it this way. Top Gun Maverick. Obviously been out for a while. So let's see here. This has been out for less than a month. Black Panther, less than a month. And it's 393, right? Here's Top Gun. So May 27th, we'll go June 27th, we'll go a little bit in. I mean, it was still bringing in a month after, it was still bringing in anywhere from, 5 to 12 million. And at that point, it brought in almost $500 million, 499 million. In fact, on day 30, it did reach that point. So, and look at the average in theaters, 3,000, 2,000, 4,000. I mean, yeah, you had some up here, but this 1.8 million, under 2 million, we didn't start to see that really until, 2 months out. So interesting, but not nearly the same, not nearly enough.
AMC. Now, why is this important? Why am I mentioning it? Well, one of the biggest thing and one of the biggest reason for why firms are shorting AMC in the first place is because quote unquote AMC is a bad fundamentals company. Now, of course, at the start of COVID, at the peak of COVID, you can't argue and say that AMC wasn't doing bad fundamentally. However, as things has progressed, as COVID-19 has kind of decreased throughout the time, AMC has improved fundamentally, and this cuts the reasoning.
Can't. Hilarious to hear them talk about supposed short thesis being killed, but no, sorry. Short thesis is mighty strong.
And
stronger than the long case.
Positive cash flow coming into Q4, and again, just a good Q4 earnings.
And we're going to see probably a worse Q4, honestly.
So this is the data for dark pool for off exchange for APE. If we take a look, off exchange already it's at 67.66. Now we are of course including SIBO in this as well, and
why?
We have discussed the reasons why.
No, you don't. That's literally an exchange.
If we take a look at including the SIBO, we're already looking at close to 80%. And now,
so now I know where they get their fucking bullshit 80% numbers from. They add SIBO.
A huge percentage for APE, and again is why I'm talking about why we're of course seeing the pressure we are in APE. APE is a extremely important instrument in the sense that it will aid us to one step closer to that squeeze, and it's precisely because of that they are putting the
masterclass and just talking out of your ass. I mean, seriously, what a joke. What a joke. All right. Da-da-da-da-da. Not the best news. The real T plus 90 date. Okay, let's hear Uncle Frank. Seriously, come on with this nonsense. This point. Oh my God. My connection is shit today. Wow. It's terrible. Okay, I'm having trouble here. But let's see if we can get the real T90 date at least.
Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Before we get started on that T plus 90 calculation, I want to invite you to try this screener over at Yahoo Finance. You've probably seen it over the past couple days. It's titled Most Shorted Stocks, and you get to set your own parameters. So I started with an intraday price greater than 90 cents, average volume over the past 3 months greater than 200,000, and I selected the exchange, New York Stock Exchange. Out of these 3,278 results, APE is the most heavily shorted, and AMC comes in at 7th.
Oh.
So let's begin with clarifying our start date. AMC Entertainment plans to complete a stock dividend on August 22nd.
So you made a custom screener that shows what you want it to show. Wow, that's not massaging the data at all. Wow.
All holders of AMC will receive 1 share of AMC Preferred Equity Units, or APE, for every AMC share held at the close of trading on August 19th. This will affect all AMC shareholders. Due to this stock dividend, scheduled orders for AMC will not be accepted between market close on August 19th and market open on August 22nd. Now on this slide, you can see the 2022 trading days calendar, and highlighted in red,
Why
I've
don't
got
they ever talk
August
about
the
the
22nd.
supposed rule that even mentions T plus 90 and whether that actually applies in this situation? Instead of like worrying about the dates. I mean, it's just curious to me. Why hasn't anybody scrutinized the actual information? I wonder.
Again, our dividend payment date.
So
And
stupid.
for the basis of this chart, I'm using that as our start date and including it in the calculation. So that would mean there's only 7 remaining trading days in August, 21 trading days in September, 21 trading days in October, and 21 trading days in November. And then if you count out to 90, you will land on Wednesday, December 28th. Now, if you don't want to count the first day, that would mean you'd land on Tuesday, the 29th.
Wow.
But on the next
Should we-
slide, I'm
should we
going to
count the
explain
first day?
why
Should we not
I'm
count the
using
first day?
the
Oh my God.
22nd and including it in the 90 days. You can see on this table, this is the APE fails to deliver. They began to appear on August 24th. Trade plus 2 business days. And that's why I'm including the dividend disbursement date in the calculation. Now that brings us to my calendar. Starting on Wednesday the 7th, GameStop earnings for the 3rd quarter. On Thursday, we'll get initial and continuing jobless claims at 8:30 a.m. Eastern Time. But also on Thursday, there's an SEC meeting on single stock ETFs at 10 a.m. That's going to include some adverse ETFs on stocks like AMC and GME and other meme names. So we're going to keep an eye on that. Friday the 9th at 8:30 a.m. PPI. Then jumping to the following week, the 13th, Tuesday, 8:30 in the morning, we get CPI. But also, that's the day of the Maxine Waters and SBF FTX show. Now, I'm hearing tonight that Sam Bankman-Fried is unlikely to testify in that House committee hearing, so we'll see. On Wednesday the 14th is the FOMC meeting, the Fed meeting, and we are going to get a rate decision, but we also might get what I'm calling the Gary Gensler SEC regulatory show, where we could get a peek at all these sweeping reforms. Now, Friday the 16th, we've got quadruple witching, and also Avatar 2 is dropping. And you could see on the bottom of the chart, I added the new T plus 90 date in red to Wednesday, December 28th. For those of you that do not
until that day comes and goes
actual
with nothing, and then you'll
disbursement day,
recalculate
then you
it,
could
right?
look to the 29th.
Into January. Be honest. You will.
And I'm going to close with this piece from yesterday. Coinbase CEO rejects FTX accounting error, says funds were obviously stolen. Coinbase chief executive Brian Armstrong on Saturday condemned SBF's account of how FTX found itself in an $8 billion hole. Armstrong said there is no way billions of dollars could have simply slipped past FTX founder and former CEO who graduated from the Massachusetts Institute of Technology with a degree in physics. Hey, I want to thank you for watching.
Okay. Very informative. You know what we could do? Yeah. Let's try that. See what Tom Sosnoff and the gangs had to say for themselves today. about today. So this is not live, obviously, but let's find the opening here.
The touchdown, I mean, like all types of things, but yet they're 3 and whatever, 9 or
It's
whatever.
okay. You gotta.
Daily options are so popular. So enough instant gratification, instant pain. Nobody's here for the long haul. The long haul is 12 hours. Okay, that's the long.
I am here for the long haul.
Well, I've made my living with the long haul.
It's been 40 some odd years. I'm here for the long haul.
I hear.
But,
me too.
But the Bears game was a little painful. I'll grant you that.
Bitcoin over 17,000. Sadnov, what do you think?
I don't think anything. I think
the cash is there, 17,100 and change.
Yeah, I mean, I don't think it's going anywhere, but I don't think it's going down much. And so the only problem is like a lot of the coins that I used to like, those are kind of dead.
Oh, those are gone. Any altcoin is forget about it.
Yeah.
So what do you think here for this week? I bought a Christmas tree at Costco, if you can believe that.
Hold on. You bought a real Christmas tree?
No. Au contraire, mon ami. I bought the most beautiful 9-foot tree you can find. It's my first green tree. I've had nothing but silver trees my entire.
The ignorance, but what? I mean, oh my God! Only buy a silver tree.
Fuses on the
tree.
I bought a fake green.
Doesn't
reflect it now. 9+ feet. It's gorgeous.
Past the Christmas tree talk. Really, there's a lot to talk about. Christmas
supply
trees.
chain issues, but I was able to pick one up. Lucky me.
Shocking.
I'm totally
how to kill 3 minutes
with the green tree.
Well, if you're going to do a silver tree, you should have done a gold tree. Oh yeah. Anyway,
I don't know if the futures are going to open here at any minute. They may have just opened. They did 40.74 down 250.
Yeah, that's a weird price because they actually closed
66 or something.
If I remember correctly, they closed like 65.
66.
Oh, 66. Okay.
Yes.
Yeah.
Yes.
So they're actually up a couple of handles.
Yeah.
But they sold them off.
In the new math, they're up a couple of handles, but on the platform, they're down 350.
Yeah. So what happened was at 315, they closed them down about 9 or 10 on Friday. And then at the post market, they closed them down about 15, 16. That's why they got the difference.
You are right. NASDAQ down 4. It's an unchanged Sunday.
Yeah, it's unchanged.
You should be pretty familiar with this.
Yeah, I like an unchanged market. I can't believe bonds are going to trade 130 tonight.
You can't believe what? Bonds are going to trade?
Can't believe bonds are going to trade 130.
Yeah.
I mean, it doesn't hurt me one way or the other. I just can't believe it. But
so soon is what you mean. Really is what you mean.
I can't believe they're going to trade 130. It's so funny because I read a couple of articles this weekend of people calling for,
1 month ago they were 119. You didn't think they were going to go up 10 handles in a month when the expected move is what, 4 handles? Yeah, 4.5 handles.
Yeah, it's almost an 8% move, and when you start to think of when you think about an 8% move in bonds, it's like it's outrageous almost. I think they're probably a little ahead of themselves here, but the fact that they're back to 130, I don't see how the Fed can raise rates at all anymore.
The market is probably playing their hand for them.
Okay.
That is correct.
Yeah, the market's playing the hand. I don't think the Fed can do much of anything, and I also don't see how how the dollar can. Let's see what we got going tonight. I'm not sure how the dollar can rally that much more from here, but it's been in a little bit of crash mode, which is nice. I hope it stays that way.
Well, you could take a look at the euro and see what's that doing. Euro's up small. Mm-hmm.
Yeah, a little bit. And I'm looking at some other markets tonight. Looks like the only thing that's really moving on my screen, maybe natural gas. That's about it.
It's such a crappy product.
I know it's a crappy product, but it moves around a lot. 40 cents a big move at night.
40 cents is a big move. I told you the 6 straddle, just sell it, close your eyes, go to the Caribbean islands, come back in 2 weeks, you make bank.
Yeah, well, so far selling the 6 straddle hasn't worked once. Just so you know.
You got time on your side. Got up to almost 8, down to 580, you'll be fine. 6 straddle.
trading natural gas is like trading crude oil. On down moves, the premium gets killed no matter what. So it doesn't matter. So it doesn't matter what you have on.
Right.
If it goes up, you get killed.
If premium, it basically works. If you catch the delta right, it works even more. Yeah.
Yeah,
And
but
on
if you
the
don't
way
have
up,
delta right, on a down move, you make money. If you short premium on an up move, you get killed.
Right.
You're
No
gonna
matter
lose
what
40
your
or 50
delta
cents.
is. Yeah, I agree with you.
Yeah. Anyway, I thought it was, we've had 2 great weeks as far as trade goes. When I say that, I just mean they just crushed premium for 2 straight weeks. And
Back down to the 21 handle, 2130 in volatility. Yep.
It would really be amazing if they close this year with vol under 20.
I knew you were going to say under 20. I agree with you.
Well, the whole last half of this year, I've been talking about vol going down to the low 20s, and it's there. Now I think they're going to close it under 20. But here's the crazy thing. And I'm in my cherry bomb mode writing about it tonight. But just think about this. You throw everything you could at the market this year.
You really did.
Everything. Yeah. You threw higher interest rates, you threw war, you threw a higher dollar, you threw velocity of the bond move. You saw crashing stocks, crashing crypto, crashing, IPOs, crashing SPACs, everything.
Extended pandemic, whatever you want to say, for sure.
Everything that you could think of, to get the momentum going to the downside to really crush everything. And you're going to end the year with volatility unchanged.
Unbelievable. It really is.
Or if it's not unchanged, it's going to be off. I don't remember where it was.
In territory you never would have called, knowing all that was going to happen.
That's right. Or okay, so the market had a little bit of a pullback. That's good. That's healthy. Mm-hmm. I'm fascinated by its ability to normalize and self-correct but instead now going into 2023, you have crazy opportunity. I mean, you have stocks that were trading, 300 and 400. Trading for $40 or $50, and you have stocks that were trading
90% lower, $30-$40. Yeah.
Yeah. You have some stocks that are trading 90% lower. You have some stocks that are trading 50, 60, 70% lower. I mean, all the stuff the market's only down 20%, but all the stuff you love to trade, it's down, 60, 70, 80%.
Sure.
So it's going to be an incredible year, the year ahead, because it's just, we're in a different world now. Yeah, and, the market handled everything you could throw at it. So now it becomes I think it's going to be a very interesting game next year.
I hope you're right. And I hope volatility swings around and, let the chips fall where they may.
Yeah. I mean, if there was a week that, I think if there was a week that they possibly, test maybe a little bit lower, because I thought they got a little ahead of themselves on Friday morning, and then they came back so strong. Maybe this week they have like a legit sell off at one point, but I don't think it goes anywhere. I think going into triple witching, they're gonna keep their wings up, and then after DECE expiration, all bets are off.
Well, we've had a monster month. I mean, I'm looking right here on 11/10. I mean, I'm not going down to 11/4. We were 3,700. We're 4,000 and change, 4,070. I mean, it's been a monster month.
What's amazing? What's amazing is that we made the high for 2022 on January 3rd. Right. And if you think about that, if you had bet that, the odds would have been 1 in a million.
Oh, for sure.
1 in a million.
Yeah, right.
I mean, statistically, that would have been like 1 in a million. Right. So
now we got to see the lows of 2023, January some date in 2023. That would be exciting.
Well, I don't think we're going to see the high of 2023 on January 3rd. That's for sure.
Hope not.
But
well, that I probably agree.
I hope not. Mm-hmm. All right, let's bring in the MULN. Let's get it moving.
All right.
Tonight.
Interesting. Okay. The Fed can't take rates up anymore. Let's see. The last space call was so interesting. Are there any going on now? How do you find space calls? recording. So, AMC Ideas Sunday. AMC Ideas Group. Is there a way to look for space calls specifically? I don't think so. Hmm. Nothing there. I know there's got to be one. Gotta be. Elon Musk joins us again live. Yeah, it's not playing. Oh. What? Oh my God. I don't know. Almost 80% dark pool. First batch of AMC gift cards are going out. Thanks, Kat. The tides are shifting. Can you feel it? The elite are losing power through loss of controlling the masses. Really? I mean, this right here, this is a typical ape right here. Really bad person. Really bad person. Christmas break. It's going to be fire for the movies. Christmas break. What's going on here? Oh my God. What's going on here? Anyway. All right. Well, let's hit a couple more videos, I guess. God, look at all this crap. I mean, it's the same nonsense over and over. I mean, I think this really bears watching again for anybody who may have missed it too.
Welcome to Stocks and Crypto Plays. I have some breaking news I'm going to share with you that I've uncovered through my research. But first, I want you to hit like, subscribe, add notifications. At the end, share the video with a friend. And please be sure to comment some bullish news below. I appreciate you all. And today I'm talking about AMC stock. And I've got some very vital, important news for you that I've uncovered from my research. So first, I'd like to say that today is December 3rd. So we are about 12 days away from the T plus 90. So from the special dividend on August 22nd, we are about 90 business days, trading days actually. From that, we would get to December 15th. So December 15th from today is about 12 days away. So keep that in mind.
Well,
but that's only
Uncle Frank begs to differ, but okay.
Only one small point. That's not why I'm doing the video. The video tonight is because I've uncovered something. I've been trying to put it together. So basically we saw $90 billion just about a week ago be announced was removed from Credit Suisse, $90 billion, okay? And they called them outflows.
Listen to this.
We all know that $90 billion was to prepay for the AMC short squeeze, and you can check that out in my previous videos. But it goes much deeper than that, okay? So listen closely. It's very important. The AMC squeeze, the AMC MOAS has to be paid for before the New York Stock Exchange will let it run. As you know, they do halts, they control the markets, the market makers control everything, and they are not going to let AMC run to the moon unless everything has been prepaid and all the exchanges have the cash on hand. So keep that in mind. And that's been...
I mean, I don't know who this guy is, but okay.
In the process since when? Since August 22nd. That's when Aron did this genius move to deliver the ape shares so that they would have...
Wow.
The hedge funds would have 90 days to cover their shorts. And they would not be able to just cover with their synthetic shares. They have to buy the real shares. So when he did that brilliant move, the hedge funds and all the dirty players involved with them knew they were going to have to pay for the short squeeze. So how are they going to do it? Where do they get the money? Well, you just saw $90 billion get sent out from Credit Suisse not too long ago, about a week ago. They paid...
I mean, okay, but $88 billion outflows, like, that's not... Let's look at the article, but it's not, I mean, we've already looked at this article, actually. Maybe we could just watch a short little clip. Yeah, we did Model 3, dude, but I mean, it's just so terrible. Let's see if I can get this short little video here. Maybe.
Now, Credit Suisse shares have fallen after it warned it will book a loss of up to 1.6 billion Swiss francs for the fourth quarter. Now, it comes as the embattled Swiss lender undergoes another sweeping overhaul. Now, for more on all of this, let's bring Bloomberg's Charlie Wells. So, Charlie, good morning. You're keeping us smarter on what's happening at Credit Suisse. I mean, asset outflows were huge, and it feels like every week there's a problem at Credit Suisse. Like, how do they get out of the spiral?
Yeah, so, Francine, this was supposed to be a day of turnaround for Credit Suisse, but it's instead, in just a few hours, turned into a day of turmoil. So shareholders are voting in Zurich today on a plan to raise $4 billion in capital. This is a part of that turnaround plan. But of course, what we are seeing in this announcement from Credit Suisse is bad news, not just for its investment banking unit, which we sort of predicted, we've known about for a long time, but also loss projections and outflows from wealth and asset management in the end of the third quarter.
Outflows from wealth and asset management.
$1 billion, which analysts from JP Morgan have just said is concerning.
So what does that mean for how shareholders will vote at the extraordinary general meeting today?
This is tricky. So proxy advisors have been telling shareholders that they should vote in favor of this change, of this capital raise of $4 billion. That involves issuing new shares to the likes of Saudi National Bank, which would take a 10% stake with those new shares, but also giving a rights offering to existing shareholders. The issue, of course, is dilution. So those shareholders who are unhappy today because of the dramatic decline in the price of that share also would see their shares diluted because of these new issuances.
But they probably don't have a choice, because we're talking, I mean, otherwise, if they don't have that capital, what do they do? Can they even survive?
That is so on point. They are stuck between what I would say is a boulder and a hard place, because, they would have a dilution of potentially 34% on earnings per share. But if they do not approve this measure, that dilution would be about 40%. So they really have few options here.
I mean, what happens to Credit Suisse going forward? I know that there was, a lot of concerns about solvency, which the chief executive really pushed back against.
Right.
But where do you see this bank being in the next 12 months?
Well, look, the plan was to really focus on private banking, to focus on wealth. But when you see that $90 billion approximate outflow at the end of the third quarter, you just think this is a real challenge of trust. And banking at the end of the day is about trusting someone to be a custodian of your money. And what we're seeing from these client outflows is that trust is in short supply at Credit Suisse right now.
Charlie, do we know where these outflows are going? Is there another bank that's benefiting?
I think that will come to light in the days ahead. Of course, there are other banks in Switzerland. This is just Switzerland's second largest lender. We know that, Credit Suisse had kind of set itself apart by being the bank that did not need to take a government bailout during the financial crisis. Other banks in that country did, but that may have created an atmosphere inside the bank of risk-taking, of failure to check on compliance in the way that other banks that did
like
struggle
with AMC.
Perhaps more in the financial crisis did not.
Okay. So, outflows from wealth management, outflows from customer accounts, as in people were taking their goddamn money out of the bank, out of the custody of Credit Suisse.
The Fed to pay for the AMC short squeeze, but that from Credit Suisse not too long ago, about a week ago, they paid the Fed to pay for the AMC short squeeze, but that's not enough money. They needed more money. So if you take a look at it, the dividend from AMC stock was paid on August 22nd, 2022. Okay, pay close attention. August 22nd, 2022, the dividend was paid, the APE dividend was paid by AMC, right?
And I said before, not really. AMC investors paid themselves a dividend, basically, and which is now, down 90%. So
the clock began to tick. These hedge funds have to pay for the short. That's when the clock started ticking, okay? Interesting. U.S. announces $2.98 billion in aid to the Ukraine. When? August 24th, 2022. Just 2 days after the AMC APE dividend. Just 2
must be related.
Days after.
We love correlation and causation.
On the very first day, on August 22nd, or probably before, they were already scrambling, figuring out behind the scenes how to pay for this short squeeze, how to buy back the real shares. The wheels were already in motion. You should all be very excited. I hope you've hit like already by now. I hope you've hit subscribe. I put this work together free for you guys to enjoy, because I want to help people to become financially free, because that's my goal. Freedom is my goal, friends. So
yeah. So why are you doing fraud on YouTube if freedom is your goal? Like, seriously, this is some ridiculous bullshit. Wow.
We saw that money, right, go out. But did it go to the Ukraine? We all know it didn't.
We all know?
We all know it didn't. So that's 2.98 billion.
No, we don't.
And I did some more research, and it's really hard to find how much money was actually sent to the Ukraine. Good luck trying to find it, but I found
this guy's attitude just fucking, oh my God.
According to Kiel,
see if you replied to my
the
comment.
U.S. has transferred military and non-military aid worth $54 billion to the government of Ukraine. And then Kiel's estimated $54 billion plus the White House's new request for $37 billion would bring the total cost of the U.S. involvement in Ukraine to $91,430 million. $91 billion. Since when? Since what time, friends? Since 2 days after the ape dividend. The timing lines up perfectly. And just a week ago, $90 billion was sent out from
Probably
outflows.
got deleted anyway.
From Credit Suisse, quote unquote outflows. It wasn't outflows. We know what it was. They were paying the Fed. They were prepaying the AMC short squeeze. If you don't see the writing on the wall now or by now, I don't think you ever will. The time is running out. So the T plus 90, we come up with trading days from August 22nd. We come with December 15th. Now, some of you are going to say that's not the accurate date. And to me, it's irrelevant. We know it's around there, okay? We know it's around there. Does that mean market makers are going to let AMC run exactly on that day? Probably not. Maybe it will. It's possible. But my guess is probably not. They want to throw you off a little. So maybe it's a little before or maybe it's a little after. We're going to have to wait and see. But I hope you're feeling very excited about the potential AMC Christmas rally. Well, that's all I wanted to share with you today. It took a lot of research on my part to put this all together over a course of a certain period of time. And I kept putting pieces together, and here it is for you. So hit like, hit subscribe, add notifications, and text the video to a friend. Share the video. I appreciate you all. Have a great night.
Ugh, God. I don't know which one I actually applied to, but I'm sure that, you know, probably deleted it. But that's the I think that's got to be the most ridiculous fantasy that I've heard. Is that somehow it's related to Ukraine. Cash was paid to Ukraine, but that's actually for the AMC. That's what this has come to. That's what this has come to, where some guy is willing to put his face on the internet and say something like this. I mean, a new player, a new grifter, newish. 4 months. They've been on YouTube 4 months. Absolutely outrageous. Outrageous. I don't know what he's trying to be, but oh, how could I forget this one? I missed this too. So how not to compare statistics from companies, right? AMC has less debt than Disney, Amazon, and Netflix. How about that? AMC has less debt than Disney, Amazon, and Netflix. How not to fundamentally analyze it.
And welcome to Stocks and Crypto Plays. Today I'm talking to you about AMC stock. I have some powerful information today about AMC debt that you've never put into perspective.
Oh my
God. The reason being is because the mainstream media has brainwashed us all to think that the tiny little baby debt of $5 million of AMC is a problem when it's not. And I'm going to tell you why. But before I do, please hit like, please hit subscribe, please add notifications.
Ready?
And at the end,
thanks, Chris.
Video with a friend. Okay,
I'll catch you later, sir. Have a good one.
Today, we're talking about AMC stock. Yes, they have $5 billion in debt. And all the way back from 2010, you can see that they had about $2 billion in debt on June 30th, 2013, actually. That's as far back as I can see it. $2 billion. So they've gone from $2 billion in debt all the way up to $5 billion in debt. That's actually not too bad. So it was a slow, steady rise. You have to also keep in mind we've had inflation of 28% since that point. We've had about 28% inflation, so that's a factor as well. So their debt rise is very healthy, and they had to deal with the 2019 pandemic, which increased their debt.
What the fuck?
Because their theaters shut down, but that's over. That's in the past. So we see their debt, $5 billion. Mainstream media tries to scare you. That's all they talk about on these finance channels. Over and over and over, they talk about the $5 billion of AMC debt. They even have the ape community so scared that the ape communities on social media and on YouTube talking constantly about the $5 billion of AMC debt and how are we going to pay it off? Well, if we do this or we do that, and everyone's freaking out. There's no need to freak out, friends.
No reason to freak
out. I want to thank one of my investor friends, Shaylin. Him and I hold very huge bags of AMC and ape, and
there it is.
The debt load of other companies.
That you want to know why? That's it right there.
Friends, I want to thank one of my investor friends, Shaylin. Him and I hold very huge bags of AMC and ape, and he pointed.
Of course you do. Of course you do. Because this is the level of fucking research that you know how to do. Pathetic. Absolutely pathetic. And contrary to what Review Cork said, enough people believing something will not fucking make it true. It will not make it true. But please continue.
Pointed out the debt load of other companies to me, and I started researching, and wow. Unbelievable the debt load of some of these companies compared to AMC.
Oh, okay.
You wouldn't believe it, and I'm going to get it on your radar today. Did you know the company Netflix, very powerful company, very high stock price, they have $16.84 billion of debt. Netflix, $16.84 billion of debt for Netflix. Take a look at Amazon. Okay. Everyone loves Amazon. You order your stuff, comes right to your door. Everyone loves Amazon, right? But guess what? Amazon has $63 billion of debt.
Okay.
$63 billion of debt for Amazon. Disney. I know there's been some rumors of Disney buying out AMC. That's not going to happen. They have more cash liquidity than AMC right now. But they have way more debt. They are not buying out AMC.
Maybe this guy is so fucking retarded. Oh my god.
AMC has $5 billion.
So hard to listen to.
Disney has $48.3 billion in debt. So get that off your minds, friends, about AMC going out of business. Never going to happen. Forget about that $5 billion being a large number. That's not a large number of debt. I just showed you these other companies and the debt they have. The revenue for AMC is amazing. They're at $2.5 billion in revenue already, just through Q3. I'm projecting Q4 revenue to be at $2.5 billion.
God, this guy is so fucking insufferable. Oh my god. Okay. Let's clear some things up, shall we? Here's Amazon. Amazon.com. AMCN. All right, we're looking at their quarterly financials. Okay. Actually, let's look annual. Fuck it. Annual. Check this out. Actually, let's go to, let me find total debt. Okay. Total debt. We're looking yearly here. All right. That's a lot. It's a large number. Okay. Sure. Let's pop over to ratios. Scroll down to something here called Debt to equity ratio. Debt to equity ratio. What is it? Measures a company's debt level relative to its shareholders' equity or book value. Okay. We can also look at, go to quarterly. Well, actually, we can just look at the price to earnings ratio, but okay. What else did he say? Disney. Oh yeah, total debt. It's a lot, huh? Yeah, tons.
Which would be record-setting revenue, and the reason being is because the new Avatar movie and the new Puss in Boots movie, plus Black Adam revenue and Wakanda Forever revenue, those are all part of Q4. We're going to be looking somewhere near 2.5 billion in revenue. We're going to set a record. We're going to be positive earnings. It's going to be amazing.
That's ridiculous.
But anyways,
that
would be $5 billion of revenue in 1 year. That's our total debt. AMC's not going anywhere, okay? So forget about that debt. Don't let it scare you. The other thing I want to point out to you is the free float of Disney shares. So we all know there's about 550 million shares of AMC in the free float. So total shares available. Let's take a look at Disney. How many shares does the Disney company have available for purchase on their free float? Okay, it's about 1.8 billion. So Disney has 1.8 billion shares in the float. 1.8 billion shares in the float.
Good.
AMC only has 550 million. So what you could do if AMC wanted to match the free float of Disney, we could authorize as shareholders, which I know we voted down because we're so afraid of liquidity or of dilution, which I understand. Yes, we're afraid of dilution. But look at Disney. They've got 1.8 billion shares in the free float.
Oh my God.
AMC only has 550 million. So let's say we authorize another 1.3 million shares.
Billion.
Or, I'm sorry, 1.3 billion shares. We authorize that to be sold at the current share price. We would raise, as a company, as retail shareholders, we would raise approximately $10 billion in cash for the company, for AMC. $10 billion. So the reason Aron, the CEO...
I mean, do we even need to talk about how that's flawed? Oh my God. Oh my God. Wow. Okay. I didn't think that this could actually get stupider.
Of AMC wanted to sell more AMC shares. We voted it down, but the reason he wanted to do it is because he wanted cash for the company, because the company would be stronger and the share price would have gone up. That's why he had to be so brilliant to create this APE dividend, so that they could create liquidity through APE. And in the long term, they're going to pay off debt with that, and the shares of AMC are going to go up. He's actually a very smart CEO. So if you figure the current share price of AMC at $8.10 times 1.3 billion shares, let's say we approve that and we sold those shares, AMC would have cash, fresh cash of $10.53 billion. Their debt's only $5 billion. They'd have approximately $5 billion cash in their pocket with zero debt. and their free float of shares would only be the same total as the Disney company. And what's their share worth right now? About $99 a share? So Disney's doing fine with that type of share float. But AMC would have zero debt and $5 billion in cash. Well, probably $6 billion, because they already have $1 billion in cash right now. So they have $6 billion in cash. Do you see how powerful AMC is? They are the #1 movie theater chain in the world, and they are buying out key strategic locations of other theaters. We know Cinemark just went bankrupt. AMC's gonna take over their best locations. It's gonna happen. So this is some great news, friends. I hope you're all very excited. You're all feeling extra bullish now. You see the power of AMC. You see how tiny the sheer float really is of AMC. They've brainwashed you into thinking we have a huge float of shares, which we don't. Anyways, retail owns them all. Look at the power if we were to sell more AMC shares. Even if we don't, Aron, he's so smart, he created Ape. We know Ape's going to squeeze soon. Once Ape goes over...
Oh, yeah. How well did that go? I mean, how can anybody say this shit? I mean, he has to be completely clueless. He has to be reading from a script or something. Like, oh, yeah, AMC shareholders didn't approve more shares to be sold, so Aron came up with this great idea called Ape. Yeah, and look what the fuck happened to it. I mean, come on. Come on. What the fuck?
Over $10, Aron's going to sell a fat bag of them. He's probably going to sell 500 million. The company's going to be flush with cash.
Yeah, flush with cash. Let's do your little stupid ass calculation, right? He's going to sell 500 million. The price is $1. That's 500 fucking million dollars, you fucking dumb fuck. Yeah, they're going to be flush with cash. Jesus Christ.
Is going to do great. And that's not even talking about the short squeeze of the MOS, because that's going to happen too. So you should be feeling better than ever after this video. You should feel better than ever about AMC stock. I appreciate you all. Please hit like. Please hit subscribe. Please add notifications. At the end of this,
you should feel better than ever.
Thanks so much.
You should feel better than ever. Look at this crap. This video literally changed my mood for my company. Been holding for 2 years. I mean, give me a fucking break. Really? I mean, Amazon is a $1 trillion company.
So, doesn't matter. That's only because the stock value.
What the fuck? Disney's market cap is 190 billion, you chucklehead. Do the math. AMC debt, 5 billion, 4.22 billion market cap. Not rocket science. All this shit does not matter. The squeeze is on. Oh my God. Shorts have not covered. LMAO, are you seriously comparing giants like Disney, Amazon, and Netflix to the garbage stock of AMC? Man, these guys are desperate to get some cash for clickbaits. Did you even watch the video? Of course I am. Dude, seriously, you compare those giants that actually have good fundamental value and long-term projects to AMC that is not a fundamental play? Are you insane? Apparently. AMC has no assets. The theaters are leased, not much in real estate holdings. I hope AMC squeezes, but everyone may have to hold for another 5 years. They have 10 billion in assets. 10 billion in assets, right? He is the best produced low-level grifter so far. I agree. And he is ridiculous. It's just how can what the fuck? It's absurd. Okay. Oh, Al's live? Shit.
congressional that committee hearing, Maxine Waters, that's supposed to be the 13th. So we'll see. The 14th, we get the real rate hike. We're going to get a half. But the big thing about it is that may be the same day Gensler unveils all his sweeping regulatory changes on payment for order flow, ATS. Who knows? And then Friday, quadruple witching and Avatar 2. So that's my big
because quadruple witching has been such
and that's the thing, Al. I'm
effective
looking
catalyst
for a
in the
convergence
past,
of
right?
events to force a short covering event.
Right.
You know what I mean?
Right.
So what are the wild cards? Highcroft.
And I'll be right back. Got to check that laundry and
black swan,
see about dinner.
Highcroft mining would be a white swan. A black swan is the euro debt right now. There's like 720 companies in the eurozone that could BK out on their debt. Okay, there's a bunch of black swans out there.
Bunch of black swans.
Our enemy knows all these dates that we're looking at right here and all these events. It's when you throw in, when you throw in something. That's why I've been so pissed at Investor Relations AMC. Because the other day we traded how much? We traded an ass load Friday of AMC and we finished flat on the day.
24 million or some crazy something like that.
Well, our investor relations department has been quiet since November 14th out. Okay, since Black Panther Wakanda. Now, you mean to tell me there was nothing else? We couldn't talk about Yellowstone. We couldn't talk about Glass Onion. He couldn't put out one decent release. So that's either really, really good news, like they're under a gag order not to say shit because there's something really great coming out, or it's really bad news that our investor relations department sucks circus freak sized dicks on ice out. Okay, because you know what? When you trade those kind of numbers, and we trade flat, okay, that means they whooped our ass. If you would have just put out one decent piece of news, who knows what could have happened on Friday? And it's another options expiration day. We traded 34 million AMC on Friday. And what's the average? Average is 26 million. On APE, we did another 20 million, and our average there is 18.45. So I'm just saying a decent piece of news could have changed everything for us. But this guy's been silent. I mean, we just signed a deal with Netflix, Al. This Glass Onion thing was a phenomenal hit. In fact, they left like 10, 20, 30, maybe $50 million on the table by not doing a full theatrical release. You mean to tell me that? And what about all the shit we're selling out on our website? This guy can't say one effing thing, Al?
It's unbelievable.
He's either gagged, which would be good news, or he's completely incompetent.
I would bet on the former.
That'd be great. Hey, man, I'll take it all back. I take it all back. That would be great. If we're under a gag because we've got some killer news coming out, okay? But my other beef with this management team, believe it or not, it's not Adam Aron. It's the fact that they have not bought one share at these depressed prices.
That is a good point. Because you look at like Cosm, for example, their CEO is buying and buying and buying and
that's right,
and executing warrants converting as preferred to common, like that guy. I would get behind on any fight that he's in.
Dakota, I just want a token. Now keep in mind, even a token purchase would help. 1,000 shares at this point. But here's the thing: during the pandemic, a lot of our executives, instead of they took pay cuts and took, they thought they were going into bankruptcy, so they were taking stock as compensation too.
Mm-hmm.
So I get it. If it's a big part of your pay package, I understand you may not want to buy more, but in retrospect, how it looks, the optics are horrible. Why? Because we have this jagoff Gasparino coming and telling us every day that, you know, he tries to make it out like it was yesterday. Like, oh, yeah, they all sold out. They left you guys holding the bag. No, this was a telegraph sale. It was over a year ago. The guy's nearly 70 years old. He's sitting on a ton of AMC. He told us what he was going to do, and he did it. Okay? I'm past it. It was over a year ago. But Gasparino brings it up every day. All we need are a handful of insiders to step in here and join us in the trenches. And now, you know, it looks like, hey, look, there's some value here. The executives, the insiders, they're buying. We haven't had one purchase in a year. Nothing. Not one buy. So that's my beef with management. You know, it's my attitude's not going to change, and I hope Dakota is right. I hope the reason that they're doing this is there's, you know, some fabulous news that you know, that they can't justify buying at this time. And the other thing I got for you, Al, is did you hear about Mudrick?
What's going on with Mudrick?
Mudrick sold their piece out of Highcroft. Okay. I covered this like 3 days ago when it came out. CSI covered it today. They got 66 cents for like 620,000 shares. Okay. But the big story is who bought. Are you ready for this list of names?
Go on.
Okay. Virtu. Jane Street. Let's see here. Goldman Sachs. BNP Paribas.
Paribas, yep.
And SG Americas.
Americas.
Yeah. Whole bunch of new buyers. Now,
no. These guys are all short AMC, though. All of them.
Good point. Good point. Now, if you remember what Pedro taught us, is sometimes that's how they start their shorting campaign. They'll step in and take a bite. They'll buy some, and then they'll come in and short you. But the best news I've got on Highcroft is that they've got one more assay report coming out before the end of the year. So they just did some debt restructuring. They paid off some debt. They did a little restructuring. Everything is going okay over there. And that's another white swan. You know, I mean, if we've got something good to say from Highcroft before the end of the year, that might be a big help, especially if it happens within my time window.
Mm-hmm. Well, thank you for that. That was informative, very informative. The fact that you know, Goldman, all the old friends, our old friends from before,
all our names,
all their old names.
Our man Virtu is in there.
Yeah.
Doug Sifu is buying. Goldman is in there, and these are, you know, relatively small trades, but doesn't change the fact that this is a sleepy little mining company, but it's, you know, one of the largest deposits of gold and silver in the world. So 66 cents is looking pretty good to me.
It's unbelievable.
You know? What I would like to see is them do a show like Gold Rush and mining it, capitalize on it, and they can possibly even show that name.
That's a good idea.
That would be cool. That would be cool. A lot of apes on Twitter say, why can't we buy gold direct? You know, do a gold token, you know, an AMC token, something like that. People will buy it. That kind of shit. You know.
Oh, I'd buy gold directly from them if they had a way to obtain it.
Yeah, wouldn't they have to have fucking gold first?
You know, these guys might truly be wholesale.
Literally in the ground.
I don't know enough. I don't know enough about it.
I think we're gonna have answers by the end of this week on that.
I believe so as well.
Jesus Christ.
We will have a direct answer for that question, Frank.
And Mudrick got out of the way. That, believe it or not, is
that little fuck.
Yeah, right. He's you got to hand it to him, man.
It's not sniveling.
He's always in the middle of shit.
He is. He's always in there.
Yeah.
What are you doing here, Mudrick? What the fuck?
Well, I've always believed
he's probably making money.
He does financing for troubled companies, which we were, AMC. And I think him and Adam got to talking, and he's like, look, I got something good for you. And that's how we ended up in Highcroft. And, you know,
you're saying it wrong.
It takes a lot of money. to pull precious metals out of the earth, and we need like $1 billion in equipment upgrades to process it to the right, to the right value where we can sell it. There's a long road ahead on high cost, but it doesn't change the fact, the perception, especially if gold keeps going up, that can only help us. We own 22% of the joint, and we could double.
Right. I don't know how they know.
Through warrants. And now it looks like, the parasites are out of the way. And all of a sudden, all of our usual suspects are moving in and taking small positions. But I'm hoping that the last assay report, at the end of the year, that they find something. That's really dropped. That's one of the white swans I identified.
So we got a lot of questions regarding CGRA. Dakota, you want to start off with that? See what you got going on. Yep.
Yeah. What questions you got?
CGRA.
Okay, so CGRA, we are expecting tonight, tomorrow early morning, a bunch of buy-ins. That's what we're expecting. I still feel that it'll first go to $1, and then it'll rip because
it's at 8 cents.
Because they already made the announcement that Biden signed off on the weed thing on Friday, if I'm not mistaken.
Oh, really?
And that's huge. But the big thing, and I will. Where is it? Excuse me 1 second. CGRA.
Hey, Al, can I ask something that maybe others might be interested in as well?
Go ahead.
Look how much higher.
I've looked for that ticker, but it seems that there's only certain brokers that we.
Oh, shut up. Where? This is interesting. Sunday starts back here. I mean, just visually looking. Look how strong the selling is in terms of volume. These sell-offs, the volume pops. I mean, it really pops. I'm skeptical. I am skeptical. And with gold, you are looking at, we're looking at a peak in August of 2020 and another peak in March of this year. And it's trying to claw its way back right now, just over 1,800 an ounce. Silver 23. Oops. Let's see. What's happening with Bitcoin? I don't know what the weed thing is. I don't know what he's talking about there. Biden signs law to boost cannabis research. Biden signs medical marijuana research bill. I'm guessing it's this. Tilray and Sundial stock lead cannabis stocks higher as Biden signs marijuana research bill. So is marijuana a play this week? Maybe. Ooh, Sundial. However, but how much of this is overall market? I don't know. Well, I don't know. I'm not saying that, but isn't there a weed ETF? Yeah, there is. It's ticker symbol WEED. WEED. I'm buying calls on weed. Fuck it. Oh, wow. That is an illiquid options market. Holy mother. Wow. That is an illiquid ass options market. Holy shit. Well, never mind on that one. There's got to be another better one. Probably be better to just buy weed instead. An ETF. POTX, THCX, and or Coke. Let's check those out. POTX, THCX, Coke. POTX. Okay, well, it's got a little bit more activity on it. THCX. Got more activity on it. And Toke. Maybe we got to go out in the future. I like that THCX. Let's see. THCX. I don't know. What do you think, guys? $345. One has the most volume. None of them have very much at all. Anyway, could be fun.
We need oil, we need natural gas, we need oil sands, whatever else that may be produced in these lands. And as coal is being phased out, the attention's being moved closer to oil and gas, and that's what is held here. That's the whole objective. I mean, I've given you 3 different examples of 2 different companies that may be even remotely interested in this, and that doesn't account for international interest if there is any, because of the sister company that runs with CGRA.
Yeah.
So there is an infinite number of ways that this could pan out. The one thing that we are sure of is that an acquisition is happening. So in my eyes, selling short or getting out now, or again, it's just my opinion. Why would you sell now? Like, in what world does that logic make sense? Unless you're trying to day trade, or maybe you own a block that's that your
That's the old,
would directly impact the
it's on sale, so I should buy it theory.
But that's the only thing that makes sense.
That's what that is.
That's the only reason.
Might as well hold on to it.
Literally,
it's already so low.
Is telling you to buy in.
Oh, it's gonna. I think this is an investment advice.
Listen to these financial advisors.
I think it's gonna work because
it doesn't matter what you say, Frank. You're giving financial advice, buddy.
Probably
you are.
Probably the strongest indicator.
You absolutely
I
are.
Can't get any, so it's going to work, Dakota. I think you're going to do good.
And I'd love to believe that, but and again, it's not financial advice. I'm not a financial advisor. I'm a redneck from the woods, right? I spun wrenches most of my life.
I'll tell you what. You want to take something to the bank. When I sell something, buy that.
Yeah. It's the same.
As soon as they get me out of the way, this shit's going to run. So. That's one of the best indicators.
So speaking of that, I went ahead and let's see. I went ahead and found this is from my state, the Ohio Investment Advisor and Investment Advisor Representative Handbook 3.0, March 2020 revision. So this document outlines basically everything you need to do, everything you need to know about being a financial advisor in the state of Ohio. So we'll just look at the beginning here. So it says, are you a financial advisor? Are you an investment advisor? In Ohio, and this is basically the same in every state, because we're dealing with federal law, ultimately. The Investment Advisors Act, see, it parallels the federal definition, right? And I didn't even realize that this was handled on the state level until I started looking into it. So the Ohio definition is contained in this revised code section, but it parallels the federal definition, which is in the Investment Advisors Act of 1940. In general, an investment advisor is a person who, 1, for compensation, 2, engages in the business of, 3, advising others as to the value of securities or the advisability of investing in securities. Okay. So the 3 elements, and they say these elements are broadly construed. The compensation element is satisfied by the receipt of any economic benefit. Any economic benefit by the person providing advice. Any economic benefit by the receipt of any economic benefit by the person providing advice. Notice it doesn't say that the customer pays you. It doesn't say that you get paid by your clients, for example. It doesn't say that. In fact, the clients, potential clients, the customer, or otherwise the source of the payment of the economic benefit, that's not even mentioned. It doesn't matter. It's the receipt of the benefit, meaning when you receive it. When you receive it, not when this person pays you, but when you receive it. No matter the source. That's what this is saying. You're receiving a benefit, an economic benefit from providing this information or advice. Okay, that satisfies the element. First element, the receipt of economic benefit. That's very important. The engaged in the business element satisfied if any one of the following occurs. Okay, so now we have 3 options. Number 1, the person holds himself or herself out as an investment advisor or as one who provides investment advice. 2, the person receives compensation that clearly represents a clearly definable charge for providing advice about securities. Or the person, on anything other than rare, isolated, and non-periodic instances, provides specific investment advice. Specific investment advice. Now, the first element here, holds himself out as an investment advisor or one who provides such advice, I don't think applies to our AMC and influencer grifter friends. They don't claim to be financial advisors, investment advisors. They say, in fact, they say they're not giving investment advice. Okay. Number 2, the person receives compensation that represents a clearly definable charge for providing advice. This may apply to some. This may apply to some, particularly those with the discords, paid discords that tell them what to buy, when to buy, all that garbage. That may apply. But number 3, providing on anything other than rare, isolated, and non-periodic instances specific investment advice absolutely applies. In fact, it's rare and or isolated instances in which they don't provide specific financial or investment advice. So, yeah, they provide they provide specific advice on what to invest. In non-rare, non-isolated, and very periodic instances, yeah, that qualifies. They are engaged in the business. And finally, the third element, the advice must pertain to securities. And interestingly enough, it doesn't have to be about specific securities. So the advice need not be about specific securities, but only rather about securities in general as an investment alternative. So it doesn't even have to be about a specific security, stock, whatever. It doesn't. Okay. Also, they remind you that it's not the case that the supposed investment advisor only do that. They can do other things as well. So it's not necessary that the activities consist solely of investment advisory services. Rather, the test is whether any part of the person's activities meet the three elements for compensation, receiving any economic benefit, engaged in the business, meaning they're giving advice, and regarding securities. And they absolutely are. Okay. So there's definitely some what do you want to call them? Exceptions. But at least on the surface here, my claim here is when we talk about these AMC investor grip, the AMC stock MOAS short squeeze grifters like Al from Boston and Frank and friends and Angelo and Finance News and all these guys that say they're not financial advisors. They're not. I'm not giving you financial advice. Okay. But they are, though, because they are absolutely providing specific investment advice. They're saying that, hey, this stock is going to go up a lot in the near future. They've been saying that for a long time, and it's gone down, in fact. So it's bad investment advice, but investment advice it is. They're also receiving compensation. They are reaping an economic benefit from doing this, from providing this information. And obviously it's about securities. They're talking about a stock. So they are acting as investment advisors in an unlicensed form, an unlicensed manner. Am I saying anything that's going to happen? Probably not. But I've been saying this for a long time. I've been saying this for a long time. Those disclaimers mean nothing. They mean absolutely nothing. It would be like having a written disclaimer that says, I'm not a bank robber. I am not acting as a bank robber. I'm simply acting as an entertainer and going into a bank and proceeding to rob it. When you get arrested, show the police the folded up piece of paper you have in your pocket that says, I'm not a bank robber. I'm simply doing this for entertainment and educational value. It doesn't work like that. It doesn't matter what you say. In other words, it matters what you do. And what you're doing is you're providing fraudulent information in an illegal manner. And is it any wonder that people have lost so much money listening to people give them investment advice who are unlicensed and unqualified to do so? No, it's not a surprise at all. It is not a surprise at all. And I don't know where the ultimate liability lies. I believe that there is absolutely some that should probably come down to obviously the individuals themselves, but also YouTube. And I'm not talking about lawsuits, I'm talking about criminal charges. Now, I'm not deluding myself to say that that will happen, but you know, if it came down to it, is it unreasonable? I don't think it is. Again, I'm not a lawyer, so not pretending to be one, not receiving any economic benefit, and I'm not really providing any legal advice. I'm simply saying that the way that it looks is that you have a lot of people who are doing something that they probably shouldn't be doing. And as a result of those actions, they may be, they may regret that at some point. I don't know. It's also kind of surprising that these state offices, these state agencies, like the Ohio Department of Commerce, Division of Securities, for example, I wonder if they're even aware of this. I wonder if they are. May have to make a phone call. The fact that they feel the need to state they are not giving giving advice implies that they can be construed to be giving advice. Yeah. If you have to say, hey, I'm not giving advice here, but here's what I would do. Is that still advice? Or is it not because you said this is not advice, but I'm gonna tell you what I would do. I'm gonna tell you what I'm doing. That's what they're saying. This is not advice. I'm not telling you to do this. I'm simply telling you what I'm doing, what I think that somebody should do, but I'm not telling you to do it. But it would be good if somebody did do this. I don't think it really matters. It's about the information. It's not about your intent. So the reason that you're not allowed to do this is because you need to know what you're talking about. And these guys obviously don't. It's the same reason why I can't make videos about dentistry and show dental procedures that I would do on somebody because I'm not a dentist. And I can't set up a shop in an office and put it in the sign counseling, discount counseling. I can't do that. I don't see how it's any different for these clowns in terms of providing advice about something that is a highly regulated, actually, industry. And it doesn't make any difference that it's on YouTube. It doesn't make any difference that they're receiving economic benefit in the form of advertising revenue, memberships to a private chat server, or subscriptions to their channel. Those are economic benefits. Why are they receiving them? It's because they're providing investment and financial advice about stocks, about a stock, about the stock market, period. So, I mean, I don't know when this music stops, but it seems like at some point it has to, it should, it needs to. And in terms of being in black and white, seems pretty clear, pretty clear. And you have to have a license to do this, really. If you're gonna receive money, if you're gonna reap any type of economic benefit, that makes you liable to these regulations. That's the way it works. So I don't know. I don't know. Good. Model 3 dude, you made it to the end. So let's see what Angelo, I know you like Angelo. Let's see what his good news is, and then we'll call her a day before or after we look at the market here and see that it's, yay, it's sideways. I don't think we have any international markets open yet. Although if we wait long enough, we will. Okay.
top short seller was interviewed by Bloomberg and he expects market to fall additional 20 to 30%. The question is why Bloomberg will be focusing on somebody else instead of some of the popular names out there. Well, his fund outperformed the other funds 80% so far, and the returns in unrealized gains is around 18%. The idea over here, guys, is that he didn't close his short position. He didn't take profits. This means that he really expects market to go even lower, because the expectations over here is that this month will end up in green. The expectations are currently met from what Dan Niles said. This is what this guy is currently betting on. A top short seller sees more declines ahead of the stocks. The global equity market route has further to run, according to the head of the fund that's beating 80% of its peers. So this short seller currently sees all equity markets to fall at least another 20-30%. Until we see any kind of button. Of course, he's a short seller, right? He sees and expects declines. But what this whole statement is about, right? He said that we're about to face a decade of structurally high inflation, which according to him makes a ripe environment for short sellers. Indirectly, he's trying to say that each company that was overvalued for the future earnings based on the potential growth that was coming from borrowed funds will be decreased, and he will be able to short and make much more money, seeing all of these companies devaluated. And you might be thinking, okay, but is he only short on the market, right? During this rally, if
devaluated,
he will be losing
I like
a lot
that.
of money. The rallies during the bear market, as we saw, could be crazy. So his fund, as you can see over here, have long and short positions on the stock market. And so far has 18% positive return according to Bloomberg. Let me tell you what is the slim part of the reporting over here. As you can see, he has the ratio of 57 short holdings versus 35 long positions, which means that if this ratio is sustained on the short side, he will be losing money. On the long side, he will be making money during these rallies. Of course, they're not sustained. The question is if he's able, to maintain the short position during the rallies. If he doesn't receive a margin call, right, he can sustain the short position and wait until the market again inverse on the way down. But think about it, if he got margin call on some of the short position and he have to meet the requirement, most likely he lost some of these gains. But the idea over here is what he's pointing out, that the market will be going lower, is the evidence that he still kept his short positions that were already profitable opened. This is risky because we talk about when the market inverse, right, you might not only lose your unrealized gains, but you might actually turn red, which is crazy, but it's very, very possible and likely. Remember, Ape stock had a days of 15% gains without any news on the Ape stock, right? No fundamentals, no catalyst, no nothing. So this means that this particular rise could, liquidate some of the short positions and can turn them red from, being up 10, 20, 50%. They can turn them down on the gains, or they can turn them upside down in completely red position. So guys, let me know, is the market going down 20, 30%, or this guy is just imagining? Subscribe to the channel, guys, like this video, and come back for more.
Oh, we'll be back for more. No, don't you worry. All right, so another week. Absolutely insane. We'll see where this thing goes. And I'm going to throw up a video and just let it play, because I'm going to listen to it. From Confessions of a Market Maker. We haven't looked at them in a while, but I'm curious what this person has to say. Shanna Sissel talking about the market going into the end of the year. And maybe this one about the FTX here, but yeah, other than that, we'll be signing off. So, yep, catch you guys next week when something happens, something notable or so ridiculous that we can't not talk about it, like the Matt Cole's Boss Blunt's debate on Twitter Spaces last week. So hopefully we got some more of them and we can jump on and see. Commander 35. Is he still out there? COSM doesn't require rocket science. All right. Your last word, Model 3 dude.
What's up, people? How we all doing? Hope your weekend's going well. So I just wanted to hop on and talk about the fact that ticker symbol COSM is a play that does not really require rocket science to trade, to engage in, to ride the wave with. It's not really that complicated. It's straightforward, to the point, no nonsense, in spite of what many people want to say. If you guys don't mind hitting the thumbs up down below, subscribing to the channel if you're new here, I would greatly appreciate it. So COSM, COSM, I'm sure you've seen by now the tug of war, the new drama at the center focus of this play, and that's because it is a short squeeze type of play. We got people going back and forth with the short interest. We got people hyping it up 1,000, 2,000%, throwing these insane price targets out there. And then we got the total reverse opposite of the spectrum. We got people saying, this is what's reported, therefore it is 100% true. I am correct. It is factual. When in reality, ultimately, this is all bullshit, at least in my opinion, because nobody knows for sure the true numbers with 100% certainty, or account for, the possible naked shares shorting activity taking place out there.
They can't get over the naked
and nobody ever will know. This applies to every freaking heavily shorted type play involved in this bullshit. But I just want to talk about this. This is becoming overly complicated for no reason. These YouTubers having a pissing contest. I'm right, you're wrong. Nobody cares, because this is all about one singular thing, and that is money. And that's what I don't want people to lose focus on. Making as much money as possible, because what is true and factual in all cases, in spite of the potential squeeze and all of this drama going on, is the reality that this is a badass, swingable, day tradable, scalpable type play that has a shit ton of momentum, hype, eyes, people with big money pouring in and out of this play, which continues to present you and I with endless opportunities to trade. Okay? And that is just undeniable. It's a fact. All of that is true. So ultimately, even if this does not squeeze,
so I don't like the
I'm right, have a chance
you're
to
wrong
make
videos,
but because you're going to be able to
I'm right, you're wrong.
it multiple times until the momentum eventually fades, whether it squeezes or not. Okay? And it has proven itself numerous times over the past couple of weeks, and I have capitalized on it. My people have, and I'm sure many folks out there have as well. It's so predictable and straightforward, to the point all the profit we are making and people out there could be making will compound into basically a short squeeze in itself, the level of profit. And that's my point. This whole drama as to holding for, whether or not this is going to squeeze, this battle, he's right, she's wrong, this back and forth, it's all nonsense, because you can continue to profit while you're waiting for any such possible squeeze, wiping out any such anxiety or stress off the table.
Looks like a shit company.
It's so simple and easy.
No, it's not about fundamentals.
And that's what I'm going to continue to be doing, because why not? Why would I ignore all these trading opportunities because we got some people going back and forth? No, this is going
he's got a point.
$100. No, this is going to $10. No, this is going to $0. I don't give a shit what any of these people are doing, because it's my money. Same with you guys. It's your money. You do whatever the hell you want with it, right? But that's just what I wanted to say, guys. This play is solid, it's badass. It has the potential of squeezing. Don't get me wrong. I think this could go over $1, couple dollars. Why not? Absolutely. But in the meantime, this is a day trader's dream. It has multiple rounds consisting of waves, giving you endless chances to profit. And that's what I'm going to keep doing throughout the remainder or the start of this new trading week and until the play is done and over with whatever happens. And I hope each and every one of you do the same for yourselves.
Okay. I got one thing to say to that. One thing.
Another blunt, man. This is good time.
They're hitting me hard with the copyright violations when I use the full song. Almost all of my videos. Yeah. Dream comes to an end. Anyway, let's see what this lady says about the market, and I'll catch you guys next week.
What's your outlook and these crazy ranges and lack of liquidity in these things? What are you kind of thinking going into the end of the year?
So it's really interesting because I think there's some stat out there. Strategas does some great work in like political influence on the markets. And there's some crazy stat out there that since like 1929, the S&P 500 has never been negative in the 12 months following a midterm.
Wow.
Ever. And like the average return over the period is like 12%, which I'd take a 12% gain right now. So I think we have to keep that in mind. I think we also have to keep in mind the geopolitical situation, like where is the stress in the system and how long does it last? Because there's certain aspects where you can be ahead of it, right? Like, you know that the market turns before the economy does. Like if you believe we're in a recession, and I would argue we're not, but there's plenty of debate that people want to have about that. If you believe that we're in a recession, the market turns about 6 months prior to when the recession ends. As a matter of fact, if in the financial crisis, you got your biggest gains between December and June, that 6 month period. And I don't think the recession officially ended till like June of that year. So you got all your returns in the 6 months prior. So it's really important to be ahead of it. But then there are also things out there that are critical in the macro environment, that it doesn't matter how economies are doing if there's stress in the system in these areas, like zero COVID in China and the Ukraine war. That's going to affect energy prices no matter what. So energy to me is an area that I'm spending a lot of time. I also have been spending a lot of time on like defense stocks. We haven't been as a country investing as much in defense as we have in the past. And my friend who works in that business always says, like, no one wants to spend on defense until they realize what happens if you don't spend on defense. It's really important to have that money spent before you need it.
Exactly.
Do it when you need it. So you got to be ahead of the game. And a lot of people also don't realize that a lot of military spending is the reason we have things like GPS and the internet and all of those things. So, you know, you want to look at that. And one of the things that I realized is that a lot of government money, especially in defense, is going into blockchain technology. So we can have a huge argument about how crypto has imploded, but I would argue that reminds me a lot of tech in the 90s. There was a lot of carnage and a lot of casualties, right?
Definitely.
You know, pets.com, that's like the poster child. But there was a lot more than pets.com. Like there was serious casualties, and of like the thousands of .com companies that launched, like 5 survived. But it didn't mean that like tech was dead. It just meant like the speculation was dead, and the FOMO of like anything and everything will work, which some of us were warning from the beginning, like, folks, this is not how it works. And it was like, no, you don't know what you're talking about. You're an old fogey. Like, crypto is the next big thing, Bitcoin this. And like, well, no, that's not really how it works. Like, speculation works until it doesn't. And when it doesn't, it's bad. it implodes. And when there's a lot of speculation in the system and everybody's chasing the returns, it allows for a lot of bad actors. And that's what happens. That's why you have the FTXs and all of those things, is because when everybody wants to get a piece of it, they'll invest in anything. They don't do any due diligence, and it allows for bad actors to succeed. So this reminds me a lot of that. I actually think the future for blockchain technology is huge, and a lot of defense and government agencies are spending money on blockchain. There's some big government contracting conferences out there, and most of the booths are AI and blockchain. So that's a place I'm spending time. I want to look at people who are using the technology. It's not about Bitcoin. Ethereum's different because Ethereum's blockchain is super flexible, and like half the crypto that's out there, like Solana and Cardano and all that stuff, that's like built off Ethereum. So like Ethereum is really different in my opinion. It's getting baby with the bathwater kind of thing, but like that blockchain is the foundation for like so many other blockchains, and so many other applications like smart contracts and all that kind of stuff comes off of the Ethereum blockchain. So now you got to look at the technology and the adoptability and like what people are thinking about. As I mentioned, it's a company that I'm working at, a startup. We're doing some fundraising right now to kind of get our seed round done. We're looking to apply blockchain technology to improve supply chain logistics and distribution, which is a direct result of China's COVID zero policy and the rest of the world realizing you can't be too reliant on having your entire supply chain affected by a country that is run the way China is run and will shut you all down. And that's why I won't touch, while I like semis right now, like, and I can make a case for semiconductors long term because they are so much a part of a lot of the disruptive technology that's happening. The fact of the matter is that as long as China keeps a zero COVID policy, there's going to be massive supply chain disruption for those companies that they cannot control. So I don't want that, and that isn't going to change anytime soon. So I can't use the whole economic leading indicators kind of thing. You want to be in certain types of stocks. So I can make a bull case for defense and energy, but there's a massive headwind and a bear case to be made for some of the tech stocks, which fundamentally are good companies doing things that are going to be in demand, but until China adopts a different policy, which they're saying in 2024 at the earliest, they're going to have massive problems and they're going to miss their earnings, and it's going to be hard for them to give outlooks at all on what's going to happen in the next 12 to 18 months. So I'm staying away from them. I'm staying away from some of the more speculative companies like Zoom and Peloton that took advantage of a situation that was temporary and probably will not continue. Adoption has happened. Their ability to continue to take market share is slowing, which is why I think Peloton just launched their whole rent a Peloton bike. Like I'm actually considering that because I would never spend the money to buy a Peloton bike, but their rental program is actually only like $100 a month, and you get the bike. And so maybe I'll try it out. Like that's something, but I can't imagine the margins on that are great.
No. And these companies too, I mean, if you look at Peloton, they have like an S8 that's big enough to choke a dinosaur.
Right.
I mean, there's so much employee compensation, and everyone's a consultant and they get free paper, right? Free stock, and it's just, just keeps diluting the float over and over. And Palantir is another one where, it's like they're passing out S8 paper to anyone who holds out their tongue, It's
and everybody was willing to take it before was because it was just going up, and they're like, oh, I can become a millionaire easy. You don't have to pay me. But now it's like different. And there's a lot of challenges, a lot of them overstaffed, thinking like the demand was going to continue at the rate that it was, which was like completely unrealistic. But the market got excited and they got caught up in like the hype themselves. Like AMC is another great example of that. Although AMC was smart in that it took advantage of that market to, get better financing, improve some of their capital structure. It's business still has issues. GameStop's another company that was able to do that. I think AMC has a better chance of survival because they were able to do that, and because the disruption to their core market was temporary. GameStop, it's a different story. And I'm sure I'm going to piss off a bunch of people by saying that.
It's okay.
And I'm joined here by my illustrious co-host, former market maker, 20 years and current day retail trader.
Hey, brother, how you doing?
I'm doing good, man. I'm doing good. And our guest today, he's making his second appearance on the podcast, CEO of Turnkey Labs, founder of 401 Financial, an actual graduate of Seton Hall, 2004 Olympic trial qualifier in track and field. He was recognized by Investment News 40 under 40. He was named to Investopedia's top 100 financial advisors, the fastest man in finance. Tyrone Ross Jr. Tyrone, how's it going, man? Thanks for coming back.
I'm well, man. Thank you for having me. Good to link with you gentlemen again.
Absolutely, man. We want to get on somebody who could speak intelligently, help us unpack this FTX situation. But before we dive into that, man, just wanted to get updated with you since the last time we had you on. For the listeners, it was episode 80. We had him in, I think that was in February, Tyrone. So yeah, almost a year.
Yeah.
How things been going for you, man, professionally and personally?
Man, a lot has changed personally since February. But things are good. Last time I was on, I was the CEO of another company, and I resigned in March and started two new companies, which you mentioned, 401 Financial, which is a registered investment advisor, which is a hybrid experience, flat fee model, if you will. It's kind of like a family office in your pocket, geared towards those that are younger and underserved by traditional markets. And then started another company called Turnkey Labs, which is, think of it like a plaid of crypto, if you will. Is an overused term, but basically an API suite that provides crypto asset analytics and data to wealth management platforms. But things are good, man. Also got a show with NASDAQ that just started called Q&A, Q-U-E-U-E, which is like a new age Mad Money. Love Cramer, but it's time to get him up out of here. Yeah, man. Advisors ask questions. I answer the questions. They come on. See, headquarters there at NASDAQ, and we chop it up. But things are good. Well,
yeah, I saw that, man. That's cool. So when did you start that with the show for the NASDAQ?
So we are in month 3. We started in October. Month 2 of the episode's coming out. But yeah, in the month 3 now. So I'll be going back to film another set this month. So this is kind of like the trial run to see how people respond to it, and the response has been incredible. So it's pretty dope. It's a really, really awesome show. So if folks get a chance, check it out. There's a YouTube page. If you go on NASDAQ YouTube page, and then if you go to NASDAQ sites website, it's on there as well.
Yeah, awesome. So wait, so you're flying out like every so often? Because
every month,
right?
Every month. Being that I live in San Diego, I was like, do y'all really need to start this during October, November, December? Can we wait until March, April, May? But it is what it is. So it hasn't been too bad so far, but I'll be going back in 2 weeks, and then I'm going to stay through Christmas. Maybe. I'm over snow. So if it snows, I'm out. I don't care what happens. My feet will never touch snow again. So my goal is, I'll be there once a month.
Good thing they don't have that show in Canada, man. It's minus 31 back where I grew up. So
no. Winter is a choice. For everyone out there, winter is a choice.
I agree.
Thanks, man. All right, man. We got to give a shout out to our sponsors of the podcast, Apex Trader and Top Step Funding. Any listener of this podcast that has the skills to pass an evaluation can become a prop trader fully funded by either Apex Trader or Top Step Funding. Our own Micro E Futures trading community has many members who are now fully funded. No need to trade your own capital. Keep 90% of your profits. To learn more, you can visit our website at microefutures.com. So Tyrone, what were your first thoughts and reactions when you heard about this FTX blow up?
Well, I'm going to be fully transparent and tell a story. This Sunday before everything melted down a couple weeks ago, we had assets at FTX. Our treasury, RAA treasury assets were at FTX. Mm-hmm. We moved them on chain. And it was a decision that we made because the CZ had put out that tweet and it tipped us off. And we were like, what are the chances of FTX going to zero? Like, right? And I'm like walking back from the grocery store. My CIO texts me. He's like, you see the tweet? I'm like, yeah. He's like, what do you think we should do? I was like, move it. Like, move it on.
Nice.
Right? And we followed up the conversation by saying, there's less than a 1% chance FTX dies. And then Monday happens, right? So yeah, we moved it right away. And again, was it $1 million? No, but it was a significant amount of capital for our treasury, which we run our business on. So that's the first thing. So the first response when it started to get to where it was, oh my God, right? That could have been us. And then the second thing was an incredible amount of anger, because what he did was just incredibly orchestrated. And there were people that I know personally that were affected, and he was anointed like GMA this morning, right? And cryptocurrency leader. Who anointed him the leader? Right?
Yeah, exactly. A leader in blowing up your account.
Yeah, exactly. And there was a little bit of anger. Then there was disappointment, because I felt like as a space, when you really come down, it was like, well, we anointed this clown. Because if you're being frank, you couldn't find anybody that would think he was the second coming of Jesus. Just a very out of shape one with a bad haircut. Right? So it was kind of like he had the thing, MIT, Jane Street. He was raising a bunch of
yeah.
Yeah. So it was kind of like the pattern matching, right? He fit what everyone thought was the thing. Yeah. And then it moved to, what role did I play in letting the true narrative of this being about the people, this being about inclusion and access, get away? Did I scream loud enough? Did I pound the table hard enough? And then I think the last part of it was back to anger, because as someone that has raised capital as a Black man, which is very hard to do, and they asked me everything short of naming my first kids after their VC firm to raise $7 million for my last company. And here he is taking $330 million out of a $420 million raise for himself. I started to become very frustrated at the VCs and all his enablers that allowed it. But the main one, again, when you start to see family and friends and all the people that have been hurt by it, it leaves you in a constant, perpetual state of anger.
Yeah.
The amount of money is just staggering, that there was absolutely no risk control at all.
Zero. And the fact that he was a deal book yesterday and just like laughed and smiled through it. And then I never intentionally commingled funds. You're lying.
Exactly. Like, seriously, like, the smart guy should have been in outer Mongolia hiding right now. I don't know what he's doing.
What are you doing?
Like,
and it's just blatant privilege and elitism.
Oh, it is.
It's the most gross display of privilege.
Right. Now,
within 24 hours.
Yeah.
Was arrested.
Yeah. I don't know. Yeah, I don't know why he's walking around, right? Doesn't make sense.
It doesn't at all. And yeah, there's a lot we can unpack here, but yeah, those are my initial thoughts. But I think, and I realize, and I do want to say this to everyone out there, we were in a very privileged and elite place to be able to see that information and be able to act on it. A lot of people weren't. Even if they had the knowledge that we had, they didn't act on it. Right? Yeah. We did. And I think a lot of that has to do with managing risk and doing risk controls as a registered advisor, right?
Yeah.
No, it's better to be safe than sorry. You could always
exactly.
And you know what's funny? Here's what's even crazier about our story. We only had Bitcoin there. Turned out they never held any Bitcoin.
Really?
Yeah, they never held any Bitcoin. Right? And it's crazy to think that. So anyway, needless to say, there's so many layers of we made the right decision, but there were a lot of people who just couldn't make that move, and we did. And there are a lot of people that should understand we had the ability to move on chain. We knew how to do that technically.
Yeah.
We were at the shelling point, right, of where the information was coming out. We knew what the hell FTT was, right?
Yeah, exactly.
I
Yeah.
mean, like you knew what all of this meant, and everybody
Yeah.
was like, "Whoa,
Yeah.
selling FTT." But you had to have known everything before that for it to make some sense to you. But if you were
Exactly.
you know what I'm
Exactly.
saying? If you had
Yeah.
an FTX account, and you're like, "Oh, CZ selling FTT," like,
Big
let me make
deal.
a
Yeah.
couple more trades. You know what I
Yeah.
mean?
But FTT is the house of cards that's holding everything up, right?
Yep,
It's just
exactly.
it's like in the 90s where you could use 5 million shares of a penny stock as margin.
Yep.
So, you could use margin in that. Up in Canada, we would give people margin on that. And so the promoters would just high close the stocks all the time and just keep, artificial supply. They'd shut off the supply, keep the stock up so they could, excess margin, right?
Yep.
So it's just a shell game, right?
Yep. And I'm glad you mentioned that, because I think this is important for everyone to know out there. This is not a crypto thing.
Right.
He just used crypto as his grift, right?
Exactly.
But
right? That was the hook.
Yeah, that was the hook.
Yeah.
But he used old traditional methods, right?
Yeah.
Of doing what it was that
Yeah.
he wanted to do, right? So I think everyone needs to understand that. It just so happens that he's hiding behind that, but this is a tale as old as time of what he did. He's a crook.
Exactly. Yeah. I just see that. I'm so happy to hear that you guys moved your assets.
Yeah.
That is like your spider sense was right on there. And that's a really good thing. And people who are listening, you should be with this man for your long-term financial situations, seriously, because that is the kind of advisor you need. Not only an advisor that can make you money, right, but an advisor that can protect your ass. Excuse my language.
Yeah.
Right? Because seriously, in this business, sometimes there's no such thing as a coincidence. I've been doing this for 30 years, and I've seen brokerage firms go down left, right, and center, right? This is completely different because it's almost like counterparty risk, right? So to be able to save your clients from counterparty risk, Tyrone, that's huge, right?
Yep.
Right? For a safety of principal and capital viewpoint, for someone who's got a long-term investor, and I'm sure, you've got some high net worth individuals, but the regular people who are investing with you,
exactly.
they need somebody like that looking out for them. So that's really cool that
yeah, no, I appreciate that. And I can only imagine how folks like yourself that have been in finance and doing this for 30 years looking at this going, are you kidding me? Like,
yeah,
your minds must be completely blown by this. And
it is.
And I think it's really important. Counterparty risk.
Yeah.
For all of the decentralization, open finance, you don't, like, you're finding out who all the counterparties were now.
Yeah.
You still don't know who all the counterparties were.
Exactly.
Right. So it's like, I would always tell people, if somebody's offering you 8% when rates are pinned at 0,
yeah,
who are they getting that 8% from?
Where's it coming from?
Right. And that's one part of it. And what I'm hearing now from folks that are different, larger exchanges or whatever else, all of the counterparties now are like, we don't trust anybody. We're not posting no margin with anybody. We're not loaning money. We're like, everyone is sitting on their hands. They're like, I can't trust you now because I don't know who you're dealing with besides me.
Exactly.
Right. So that counterparty risk, I think, is something that for all of the crypto hippiness and for all of us that love the space, what I think, if the space is to evolve, you're going to need people with 30 years, 40 years experience in traditional finance to go, hey, you idiots don't even know what counterparty risk is.
Yeah.
You might want to study this. There's a reason why markets work the way that they do.
Yeah. I mean, exactly. Exactly.
To recreate it with technology is great, but use the technology to make it more efficient.
Exactly. And you guys have the capability.
Right. Exactly.
Right?
But if trillions of dollars are traded every day globally, what makes you think you're going to sit in your mother's basement and make that better and be able to recreate it? Now, I love that we're seeing financial engineering in real time, but counterparty risk, prime brokerage, market, like all these things, you have to study these things to know how they work and then go, all right, maybe, automated market makers. That's cute. But guess what? There's slippage. There's all these other things in there. If you don't know these terms and you just think that it's old Wall Street vernacular, you're an idiot.
It's
and clearly he didn't, but
I
don't
mean,
have enough time to go into
it's amazing. I'm so cool to hear that somebody actually kept their client's head out of the lion's mouth. That's a big thing, and just because I've gone through, I mean, hell, I've had clients who used to take down clearing firms for fun and sport. So, you know, like, yeah, your clients are lucky that,
Man,
that they have
you keep throwing it out like clearing firms. What is the old term when you're dealing with another firm? Who do you
clear?
Right?
Where do you clear? Yeah.
You've never heard, I'm tweeting this, but you never heard that uttered in crypto. Who do you clear?
Yeah,
right?
exactly.
Because they would go, what does that mean? Right?
Yeah.
You're not like, you don't even know what that means. You're not doing everything. And that's what happened here.
Yeah.
The biggest piece of this, what I want everyone to understand, and I've been saying this for a while, what they did was bundle everything. They were an exchange, they were a broker, they were a custodian, they were doing
everything.
How are you clearing, settling, making markets? Like you're doing all of this?
Yeah. Oh, exactly. Right. There's got to be some, separation of church and state somewhere, right?
And that's so, that is so, like, that is definitely tweetable. It's like one thing you never heard of crypto, who do you clear through, right?
Exactly.
Like, tweet that, get that out. But that's such a powerful thing, but you've never heard it. So yeah, I think you're kind of leading the conversation where it needs to go. But Ray, as you were saying, man, it was a lot of frustration and hurt, man. I'm just very frustrated because so many of us have been trying to do the right thing, and trying to get crypto to the masses has been all uphill. It's not been easy. Right. And this dude torched it in 2 weeks.
Yeah. Which is the unfortunate part. Not to bring it back to that risk part, but I for the listeners who are traders themselves, I mean, even though you said it like, oh, maybe 1% chance something happens. Well, guess what? It did happen in Black Swan.
Yeah.
It happened, and you have to like factor that into your risk parameters that, hey, something off the wall could happen here, and protecting yourself against that is of the utmost importance.
That 1% chance could be 99% of your capital.
Exactly.
Yeah.
And there were a lot of hedge funds that found that out. And one in particular that I'm a big fan of, Travis Kling and Iki Guy, like that 1% chance could be your fund. That could be your LPs getting smoked. That could be your clients, like all of that. Yeah. And even though and it's funny, like it was our treasury, it was our money that we were just managing for the firm. But I was like, this is the exact example for us to show the industry and our clients of our risk, right? And protocols and management and how we actually go through it. And we tweeted it, like we're transparent about our treasury. Like our treasury public address is out for folks to see what we own and what we did. And you can see when we moved it and how. And I think our clients see that, everyone sees it. And I think it shows good risk management awareness, right? It's like the ability to identify risk. This is a risk, right?
Exactly.
And then manage the risk, right? Yep. Manage away from it, right? Trimming positions, removing position altogether, hedging, right?
Yeah.
The other way, everyone in crypto's levered to hell, but have you hedged? Like, what's your downside?
Yeah.
So all these different things, like we thought about, and we try to keep in the forefront of our clients' minds. But yeah, Ray, you nailed it. There is that risk assessment and management and identification is so important.
Yeah, huge. We've had people on this podcast who were in business with Sam, people who I respect. And I know this has been talked about a little bit, but I want to hear it from you. Is like, I could never just get by the way he dressed, man, and like not combing his hair, and like,
right.
And I don't want to be like, because like you said, everyone revered him. Everyone was like, oh, he had all the signs of this. How did he fool so many people and some intelligent people as well? Like, what do you think?
Well, it's funny. I said the same thing. I mean, how do you trust somebody to walk into a meeting looking like that?
I mean, I'm seeing him at conferences. You know what I mean?
Conferences on the hill, looking sloppy as B. He's like, he bought shoes and didn't even untie the shoes like they give you when it's right out the box. He just took them right out the box and put them on, right? So you joke about that. And yeah, I mean, he's, his body is shaped like a bag of wet clothes, but it's crazy that it got to that point just from, he didn't take time to even, he didn't even care enough to present himself in a way that would exude confidence. That's how confident he was that he was able to pull this off because of the strings he was able to pull. To your question, I think he pulled it off a couple ways, and we're going to have some real talk here. First is pattern matching, right? Which I wish would stop. Pattern matching meaning he fit the description.
Sure.
white, male, young, smart, right? Connected, his parents, everything. So he fit it. It's the first thing. Let's just call it what it is. I don't think the word sell is a bad word. He was an incredible salesman.
Yeah.
He's Gordon Belfort. He's, you know, he's the Bertie Madoff. He's the slick talking, but he didn't really, it wasn't New York, New Jersey slick. Shout out to all my New York, New Jersey people. We have a very nice way of talking people into things. Right? If not, we'll beat you up. But what he did it in a way where he knew, oh, let me talk ESG. Let me talk giving away my, right? The effective altruism, right?
Yeah.
He was the consummate bull-esser, right? Like just what he was.
Definitely.
The last bucket of that was he knew, and he said this, he knew the importance of marketing.
Mm-hmm.
If I can get on every magazine, if I can get the brand everywhere, if I can get in front of Congress, if I can buy politicians, not only in the US and the Bahamas, right? Now I've done all the things that all of the powerful people in the world have done. They buy everything. They buy politicians, they lobby, they do, right? And that's what it was. Oh, he was in front of Congress. He's testified. Trust him. Oh, Sequoia's invested. As an investor, what due diligence am I going to do more than Sequoia?
Exactly.
Write a check, right? So it's that social capital that he spent and that brand awareness, because you would sit there and say, oh, Sequoia's in, I'm in. And that's what all those folks won't say now.
Exactly.
Did, right? Oh, no one did due diligence? Oh, no, Sequoia's in. It's okay.
Yeah. You know.
Right? So that's what I think it was. And the one, I can't think of the gentleman's name now, but again, seasoned Wall Street veteran was like, I call BS. I told him to his face.
That was this guy from the CME. That was the president of the CME.
Yes. He's like, you're full of it.
Yeah.
Called, you know, Elon. I don't know. Right?
Yeah, exactly.
You know, and Elon just essentially saw some version of himself. It was like,
yeah, exactly.
Elon's like, I can really build stuff, and I'm one of the smart people. Or there's nothing here.
Yeah.
So I think that's how he did it. But mainly because I think you're seeing it now. It's a level of elite privilege that is gross. That he can go on GMA, that he can still be interviewed, and he is not arrested. That is a slap in the face to every single person that has trusted him or whatever. And by the way, let's be very clear. Kevin O'Leary said he would back him again.
Yeah.
Peter Thiel comes out. Yeah. Peter, hold on, let me make sure my internet catches up here. Peter Thiel comes out and says, I think he's telling the truth.
Yeah.
So what does that mean? Now there's this continued hedge around him.
Exactly.
People who have power, right? The people who have power and money and a big megaphone keeps him in that perch. No, I think he's telling the truth.
Yeah, exactly.
Seems like a nasty coordinated effort.
Listen, if you and I had stolen a chocolate bar, they'd have thrown our ass in jail.
Oh.
Okay? Like, seriously. Like,
I mean,
you know, I met Bernie Madoff when I first started trading at a
Wow.
traders convention, right? And this guy is I feel, is the Bernie 2.0, right?
Yep.
Bernie was not a nice guy when you spoke to him,
Yeah.
right? He was very rude, he had a huge ego. This guy just did the soft shoe, right?
Mhm.
And everybody thought, oh, yeah, he's harmless, right? Yeah, I'll give him $1 billion, right?
Yep. No, and to your point, and you know what's funny? That's where I think he flipped the lens, because you would think someone to pull this off like this would be a big, gruff,
Yeah.
right? And
Yeah.
you'd be like, ain't no way this little kid going to
Yeah.
You know what I mean?
Exactly.
Like you could pat him on the head. Hey, I gave you
Yeah.
$400 million. Don't lose my money. But turned out that he was the exact opposite, which again, you can't, the pattern matching has to stop. Just because someone is X, and X, don't know. You have to check people's character.
Yeah.
And how do you feel? Forget everything else. And
Yeah.
I say this, especially in finance, forget all of how do you feel about humanity? Tell me that, right? How do you feel about humanity? Here's the other thing. what have you endured? Because there are a lot of CEOs now, some that I consider friends and I know in the space. I'm very disappointed that they've literally hid under a desk during this whole thing. How are you not overly communicating to people what is going on with your company and it could possibly be liquidated, that you don't see anything?
Yeah. That is so common in the traditional brokerage industry.
Yep.
And it's, you know, when I you know, when bad things happen, they would always kind of like wait until, you know, they just couldn't hold it any longer, and then they'd tell you, right?
Yeah.
And that allows large clients to get out. That allows, you know, and then they just hang it, right?
Yep.
So, you know, you see a lot of, you know, collateral damage now, and yeah, there's not a lot of people going, "Ooh, we had exposure, and you know, watch out," kind of thing, because they don't want to run on their service.
Yeah, for sure. And I think that's why I think it goes back to humanity. It's like, find out if do you love, like, who do you love more than you? Right? Like, there's a humanity angle here that I'm ardent about making sure is part of it. Because if you love people, if you really believe in humanity and doing right by people, I'm not going to torch my stakeholders. I'm not going to torch my employees. I'm definitely not going to torch my customers who trusted me. I'm not going to disappoint my mother and father, right? I think about that all the time. Like, literally, if my mother or father saw me doing something, it's always in my head, right? Will my mother be proud of this tweet, just in case she figures out Twitter, right? Which is why I don't argue or do anything like that on Twitter, because I don't want to disappoint them. But that's the love of humanity that was imbued in me, because again, I think there's a certain background and things that go into that. So when a lot of people that gravitate to finance, it's the love of money. It's not the love of people, of what I can do to affect people. And here's what's the most disappointing thing in all of this. The product is phenomenal.
Yeah.
It's a phenomenal product.
Yeah.
That maybe Fidelity or Schwab will pick off, right? When all the are left.
Yeah, exactly.
Had a phenomenal product that was easy to use. It was elegant, right? It would have brought in a lot of the next million users.
Yeah.
That's what's so crazy about it, right? So leaning on that and making sure that everyone has financial access and learning about trading and learning about how to invest and all these other things, like just the love of humanity. It's not what sells. It's not what VC backs. It's not what Sequoia is. They're full of crap. They don't care about people, right? They want to make their fun. And that's really what it's about.
Well, I mean, I completely, I grew up in this industry in the 90s, and I mean, I've seen things that would turn you blue. Like, you know, like I've seen brothers take each other down for like $10 million. And then people are like, "Oh, what's it like to deal with him?" I'm like, he just took his brother for $10 million. What do you think he's going to do to you if he does that to family? Right. So I have seen stuff like that. I have just seen the worst in people. And when I entered the industry in the early 90s, you know, it was right after that 80s greed decade. And, you know, everyone is, you know, if you want a friend in this business, get a dog, right? That was the line, right, from Wall Street, right? And so we always were wary of people. Like, we were always suspicious, right? And all of my guys were from New York, my initial clients, right? They were like Jersey, Long Island, right? Those kind of guys, you know, like, and, you know, so it was like a band of thieves, and we stuck together, right? But everyone was always wary of everyone. And as soon as you let an opening, somebody would take you, right? And now everything's kind of changed, and everyone's friendly and wants to save humanity and all of that stuff. And I hate to say it, but I think a lot of people are using that as cover.
Well, he was.
The grift, you know, it's a good grift, right?
He was.
It is. And I want to say this before we move on. For those that are out there that are listening, and I know you guys have a broad set of users, and those that may be young and want to start a company or want to be in, you know, a finance or whatever the case may be, do understand. I believe in capitalism. I think it's a great thing, right? I think it's something that we've been blessed to grow up in this country, and whatever it is that you want, you work your butt off for, you can have. But I need everyone to understand this. If you don't get anything I say from this podcast, understand this. If you come into this industry without morals and principles, capitalism will separate your soul from your ambition.
Mm-hmm.
Hard stop. Right?
Oh, yeah.
Put it on the fridge.
Definitely.
Don't have morals and principles. Capitalism will separate your soul from your ambition.
Yeah.
And you're saying you've seen it for 30 years. I've seen it in the.
I've experienced it.
Yeah, the teenage years I've been, and you literally see it happen in real time.
Yeah.
People continue; they just take their soul and sell it and sell it and sell it.
Oh yeah, yeah.
And then the ambition or the reason you came into it with any, it's just gone because the focus now is right.
Yeah.
Bringing
It's true. I mean, like I had a partner of mine that it took me for a lot of money, and the other thing is and he was like a brother, right? And then you look at the classic movies like Trading Places where the Duke brothers, they screw up Dan Aykroyd's life for $1 bet, right? Just as an experiment. The people who are in this industry with huge amounts of money, they will play with you, right?
sure.
Like you're just like, like you're a toy for like a cat toy, and they're just like flicking you around, right? And I've experienced that. So you have to, and I used to always say, man, I had a conscience, so it really made it hard for me to work in this business, right?
Yep.
And so yeah, for people who are starting out, don't lose that, man.
Yep.
It's going to be harder and it's going to take longer to make money, but at least you'll still have your soul.
Yeah. The hard dollar is the right dollar. 100%.
Yeah. That's it's a good topic. It's something I definitely been thinking about during this time, right? Is like to the discussion we were just having with like, how did he, I mean, money's flying all around, right? People get caught up in this.
Oh yeah.
And it's, like you were saying, Tyrone, it's tale as old as time, man. I think about, one of the South Sea bubble. And I found this interesting because Isaac Newton, so like scientist, right? Renowned scientist, logical thinker. He got caught up into it. He lost his whole life savings in these type of things. And I think it goes back to like, man, like you were saying, like judging people on their character, right? Like removing all that stuff and like, who do I want to be in business with, right? Is this the type of person I want to associate myself with? Just on their principles, but like you're saying, like society, man, it's like, what do you make? What's your status?
Exactly. Yeah. What kind of car you drive?
Yep. And it's unfortunately it's taking a whole generation of wealth down with it. And it's right. And I know it sounds cliche or whatever else, but yeah, we have to get back to humanity. What type of human being are you? Will you put others before yourself? Oh, we're doing our best to protect customer assets. Okay, well, how about this? You give up every single dollar you're worth, just give it to the folks and make them whole. And then any future earnings we get from you too, right? Oh, we're working hard to make sure customer funds. Oh, you're worth how much? Make sure they get you just still handing out the money, right? Like
exactly.
I'm going to give up every cent of my net worth and any future earnings till everyone is made whole. Right? Can I avoid jail? Maybe. You're still going to jail, but that's what should happen here. So when they say that, it's such nonsense because you're not really focused on the investors. You're not focused on protecting people because whatever dime you had, even if it meant truly going out of business, if you 250 million in cash, great. Take that cash, make sure, go get the list and make sure folks are made whole. That's the other thing here for folks listening. Read the TOS, if you will, which they try and treat terms of service. Anytime you sign and sign up for one of the things, read the terms of service, right? Because if you put assets on these platforms, guess what they're using your money to do, right? Learn hypothecation, rehypothecation. In the event of bankruptcy, guess where they're going to get the capital first? Yours. Right?
Yep.
Unsecured versus secured. This is a bigger financial education story. Folks really don't know what a bank is and what a bank does. They don't know what an exchange is and what an exchange does. I don't know what rehypothecation means. I don't read the terms of service. I just want to hurry up and get on this thing so I could trade the coin that some idiot put on Twitter. So I just want to link an account, or I listened to a podcast and they told me to open this and I get $20 free to be able to do. You didn't read the terms of service. Now look. And that's one of the things that I was saying. I did a spaces with CNBC. Well, what can we do? Read the terms of service. Like, look, like really read that or have someone read it for you. And I know it's not the common thing. You can't expect people to do that. But that bothers me when people say that. Well, we could expect them to do certain things, but we can't expect them to read a document that possibly keep them from being harmed here. Read the terms of service. Make sure that you do not believe anyone unless you do the research yourself. I don't care how rich, how small, how tall, how sharp, how handsome, how beautiful. Don't believe anything. Go look it up for yourself, because people have embedded interest. And I'm screaming so loud about this, okay, because they sponsor me. I'm an influencer. I do all this other stuff. I don't use the product, right? Like, there was so many cases of that now, right? Did we really think Tom Brady was trading on FTX? And whatever they paid him, Tom Brady went to the, he went to the store, bought a pair of shoes, and that FTX money was gone, right? So I just think there's so many ways here that the average investor is led astray. And this is whether I refer to stocks as dinosaur bones, but whether it's dinosaur bones or crypto, no matter what you're invested in, read, learn about what you're putting your money in, understand the stock market, understand all markets, right? Like being able to read and see what goes on. And I think you'll start to be able to piece the puzzles together as a trader, as an investor on, yeah, I know such and such is doing this, but the best thing for me to do, I'm selling here. You know what I mean? Because I got to make rent. I got to do whatever. It's just, I can't ride it to 200. It got to 150. I'm up 75%. Meet me on the next ride, right?
Exactly.
And I don't think people have the temperament or the behavioral, instruction to be able to do that. But anyway, I digress.
It's true. I had an old Italian client who used to say, "Listen, kid, $1 million here, $1 million there. It adds up. Don't get greedy."
Yeah, it all adds up. Yep, absolutely. Absolutely. Crumbs of value.
Yeah, people want the home run. Tyrone, obviously, I think like some of the questions people are having like kind of like around regulation, or like what goes through the mind of regulators when they see this, right? I mean, he spoke with regulators, right? He was on the Hill, like you were saying. I believe on our first podcast, when we were talking, you spoke to some people around crypto regulation and stuff. What do you think's going through the minds of these people?
Hellfire will rain down. It's gonna get, I mean, you look at, as far as our space, FINRA immediately came out with a crypto asset communications thing for all broker dealers, right? And all FINRA registered advisors. My firm is registered here in California. The DFPI, which regulates the RAs here, sent something on, hey, are you affected by FTX or your clients? I will say this. What's funny is I think they said the SEC had done some type of background or look into his stuff and was like, no, it's all good, all clear, right? It's funny to me. So there were a lot of folks he had in his pocket, right? Sure. Which is terrible. And Gensler doesn't come out of this looking good at all.
No kidding.
But here's what I will say to people. Even if there was regulation, wasn't Bernie Madoff, wasn't he like on the board of some whatever, like
he was the father of the NASDAQ.
Yes. Right? Like there could be regulations. There are going to be people who find a way around it.
Yeah.
Am I anti-regulation? No, of course there should be regulation around investor protections.
Oh, yeah.
Right? And I think that is important. Which I will say is this: the SEC, which is why when I had said something to them, and I think that's what you're talking about, the Investment Advisory Committee board I was on, when I spoke to them, I said, here's what I think you all should do if you want to regulate crypto. Define investor for me, because the investors you protect are not the people that just got smoked by FTX.
Right.
The investors you protect are the Black Rocks, Blackstones, all those folks. That's what you deem to be investors. So if you really want to protect investors, broaden that term, define it for them. You have it. It's this first thing. Second thing is, let's just keep it real. Do the SEC really protect individuals? Let's be honest. Like, do they really do a good job of that? Right? I think the one thing that everyone is like the FDIC insurance. Right?
Yeah.
Like they do a good job because there's like actual, all right, 250,000, I had 100,000, I'll recoup.
Yeah.
But like the SEC ain't swooping down in the middle of anything. No.
No. Listen, I've been in front of the SEC. That's not a news flash. Both as a witness and having them come after me. And they are I really don't know what they do all day there. And honestly, just some of the things I remember once giving evidence, and it found out they flew up to Vancouver from Washington to interview me. And once they started interviewing me as a witness to, a case they were working on, they realized that they were interviewing the wrong guy. Right? Because a transaction happened. I'm like, I didn't even do that transaction. This guy did. That's not even my RR number. That's not even my registered rep number. Right? And that's not even my writing on these account forms. And they were like, I was like, y'all didn't get the right guy, to even what are you doing,
Yeah. It needs to be reformed. It needs to get better. There are some good folks at the SEC. I love Hester.
Yeah.
I had conversations with Commissioner Crenshaw's office, but and again, it's like investor protections, but you approved BITO, a Bitcoin futures ETF.
Yeah.
What are we doing here?
Yeah.
Like you made a Bitcoin futures ETF available to retail?
Yeah, exactly. Yeah.
It doesn't make sense. But I'm also not of the camp that believes that a Bitcoin spot ETFs would have solved this. How?
Yeah.
There still would have been people who went to FTX and were buying directly or trading there that would have been affected. It wouldn't have stopped it. It just would have been people that chose an ETF and other people, whatever, or they would have bought an ETF on FTX.
Yeah. This is almost as bad as that. This is almost as bad as that lady who took like 15 billion. She said she was creating some coin, and now she's disappeared off the face of the earth.
Oh, yeah.
Yeah.
Nutty.
It's yeah.
Crazy.
It's a lot of money.
Yeah. So you're thinking regulators, fire and brimstone. That was the
hellfire will rain down, man. I think they're gonna overdo it. Folks that have been quiet are not quiet anymore. The CFP board finally comes out with crypto guidelines for advisors. FINRA put their thing out. Like everyone now's the time, right? And it's just going to be heavy-handed. And I think they're gonna look. I think the SEC and CFTC should get together, give unified guidance. What is a broker? What is an exchange? What is a custodian? Like give them all like who's going to regulate them? What are securities? What are not? Right? Clarity on that. Right. From a tax standpoint, what is an NFT? How is it, right? Short-term, term, capital gain, property, whatever, all these different things. Like all of this needs to happen, right? A separate realm for DeFi, like you can't have protocols register like a company register in a stock, right? Because as they upgrade the protocol, and everybody's supposed to go back to the SEC and re-register every time there's a protocol upgrade, right? And there needs to be some separate siloed guidance for that. But I think the best thing that could happen right now is the SEC, the CFTC has to get together, give unified guidance, and then start regulating, the exchanges and follow maybe what New York has done with the BIT license and stuff like that. But they're going to regulate stable coins. And by the way, there's still some dominoes to fall in this whole thing with crypto. Some big ones.
Well, maybe some of the big players in crypto need to get together and set up like a clearing, like a DTC, or have some sort of self-policing kind of checks and balances. I know that's against the whole, having somebody look at everything, but
There's that word again, clearing. Yes. But and it's funny you mentioned that, because I was just having a conversation with the CEO of a crypto company this morning, and I'm like, you and all of the other CEOs that are in this industry need to call each other, have a conversation and say, if we really want to build trust with financial advisors in the wealth management space, where crypto is torched by reputation, by the way, it's over. It's over. You guys coming out of that with some unified ways. We came together and we came up with a white paper and 4 steps on custodian safety, right?
Cool.
Calls for financial advisors. That's the only way to get the trust back. But if everyone stays in their corner, every exchange stays in their corner, right? And I know Coinbase and a few other people started like some consortium and group or whatever. What the hell have y'all done?
Yeah.
Right? So, I know the proof of reserves things is it's taking off now, but proof of reserves, proof of liability, proof of counterparties, proof of everything, right? Proof of, again, segregated accounts.
Exactly. Ooh, what a concept.
Like,
it's like, seriously,
I will tell you firsthand, from building in the space, how many conversations I had at crypto exchanges saying we need segregated accounts. Segregated accounts, yeah. well, we can just have a house like household. No, I was like,
No.
Mr. and Mrs. Client 1 needs their own Mr. and Mrs. Client 2.
Exactly.
So, no. We could just have a master account and you just put it all together. And I'm like, how are you guys operate like this?
It's like an omnibus account for retail. No, that doesn't work.
It doesn't work. You need segregated accounts, but and checks and balances and all those things. So I think if we do that, we'll be better off, and I think we'll get that moving forward. I still remain bullish on the space. I'm still as big a crypto hippie as ever have I been. I'm hurt. I'm disappointed. I'm frustrated, and I think this needs to happen because all the naysayers were right. Chuck E. Cheese tokens, tulip bulbs. It's all right. It all looks right.
Well, the thing is, it's still a young market, right?
Yep.
And it's maybe it's hitting its teenage years, and it's going to have some growing pains, right? It might get pulled over by the police a few times for having a little weed in the car. So you gotta it'll grow like every market grows, and eventually it'll mature.
Well, and all this that happened, right? Like this was like partly why crypto was founded, right? Like not putting the trust in one person's hands, right?
Exactly.
And so, I think at least people who are like smart, like knows like this is not a crypto problem, right? This was just a fraud problem. This goes against the whole tenets of why it was even started in the first place. Tyrone, what are some of the I'm just curious of some of the conversations, what your conversations have been with people, professionals, right? I'm sure it's been different than from clients and then maybe family and friends. What have the conversations been like?
I have a unique lens because I've been able to talk to venture because I'm raising capital now and able to talk to clients, able to talk to other CEOs, talk to reporters, I have a really intricate lens into some of the conversations, but I think the overall sentiment is I just think folks are stunned, right? Like this is happening, and still it's like, well, what's the next dead body to fall out of the closet, right? And there's fear. I think there's going to be a lot of companies that don't make it, whether their treasuries are stuck there, whether there's going to be forced M&A and consolidation in space. A lot of folks are worried. But I think the overall sentiment amongst those that have been through a bunch of these in crypto and see the longer term promise, folks are doubling down like myself. We're doubling down. We're still building. We're still having conversations. We're still going in. So I think it depends on who you talk to. Mm-hmm. Not a lot of questions from clients. I had one client that reached out and she was just like, I just really want to understand what's going on here, right? Like, I don't own any crypto, but what's going on, right? I sent an update to our investors for Turnkey just of what was going on. I'm about to record an update for, our clients on the RA side as they kind of go out with our newsletter, but we've been very transparent about what we thought publicly. Mm-hmm. So I think it depends on who you talk to, but I will say this. It's just ice cold right now, right? I know, and listen, I love Bitcoin, and everyone knows I love Bitcoin. Am I a Bitcoin maxi? Yeah, kind of, but I think there's other projects that I see some promise in, and the Bitcoin folks trying to separate Bitcoin, not crypto. It's crypto. I get it internally in our own little world. Yes, there's a difference, and I say there's a difference too, but the broader humanity and everyday American is all crypto. They don't care to separate it. Regulators don't care to separate it. The heads of wealth management and institutions don't care to separate it. It's all crypto to them. So I think it's a matter of who you talk to, but it's ice cold right